That has ensured that despite the global headwinds, the country continues to do well. And we have become the oasis of growth in the whole of the global economy. So I think going by that, my sense is that till such time the private sector investment really kicks in, which will, to my mind, will be a function of the global environment. And maybe government will have to really focus on infrastructure even in the current year also. And with that, probably the growth will be ensured and the fiscal automatically will get taken care of because GST and the taxation which will accrue from that will take care of the requirement of ensuring the balance in the fiscal.
George, capex is something which we're going to talk about a lot in the budget. Expectation is over 9% jump in capex outlay there. But the bigger thing is the private capex coming back. If you look at the L&T commentary after earnings, the order book comprises of more private capex this time as compared to last year. So it was 25% of the order book last year. Now it has gone up to 36%. So is private capex coming back a good kind of a buffer for the finance minister where she can now focus on other stuff?
Yeah, definitely. If you look at the last 5 years, the capex has been going up, starting from government capex, which has grown in the last 5 years, 22% CAGR. And now, if you look at the BSE 500 companies, and it is clearly visible that the capex is inching up. Capex to sales, if you see, it has been going up from FY22 onwards. So there is a clear indication that this early capex cycle is over. Now the full-fledged capex cycle has to kick in. If you compare to the past also, after a big consumption boom in 2010 to 20, we are seeing a capex coming back. So it is mirroring in some shape or form of 2000 to 2010 decade, but the global growth is the biggest challenge. China is growing at lower pace, and US with a magnificent 7 doing well. Otherwise, the rest of the economy is not that great. So it is a very challenging environment in which, the growth has to happen. But in my mind, it is a clear capex environment, and government will push the capex. Whether it is a government capex or even creating conducive environment for private capex is also very much possible.
Rohinton, given the kind of capital outflows that India equity markets have seen, or just the entire markets as such, is deepening of the bond markets, get the bond markets to be more livelier, more healthier. What can realistically the budget do? How feasible it is of bringing parity between capital gains for bonds and equities? Can we expect anything this budget?
So it's very difficult to say. As you know, they actually detached the two in earlier years, and essentially, if you have mutual funds which are more debt-oriented, they tend to kind of attract a different rate of tax as compared to non-debt-oriented funds. But the thing that I would see over here is that the government is going to push to attract longer-term, more stable foreign capital into our capital markets. And the way to do this is perhaps not color the entire stream of FPI players, but possibly look at potentially the big players like the sovereign funds, the pension funds. Already we have a special regime for sovereign funds. I estimate that one area that the government can look at is to extend that to bigger certain types of other funds, like bigger pension funds of foreign countries, etc., which can come in and invest and bring a kind of a modicum of stable capital into our stock markets. I think that's what India really needs. We need this especially during the period until we can settle our externals situation. And unless we bring in foreign direct investment and long-term capital from abroad, we will not be able to rein in our currency depreciation.
No. Mr. Khara, you want to add to that? You agree with Rohinton, I guess?
No, I do agree with what Rohinton mentioned. We have got a very clear focus when it comes to manufacturing on some of the newer industries. So I think if at all we can have long-term capital coming in through FDI route, that will go a long way in terms of course, supporting our currency. And as well as if at all currency gets supported, we'll have a situation where even FIIs will also be stable in the country. So I think that is one of the crying needs, if I may say so, of the economy, if at all we can get the long-term capital through FDI route.
Before we go to Prateek, I just want to check with you the GST numbers which have come in, 1.93 lakh crores in January, and that's for the month of December, which gets reported in January there. I think the buoyancy of the tax which the government was looking at is coming back in terms of consumption, which is there. 1.93 is it's a 6% jump on a YOY basis, but we were looking at FY26 tax collection to be lower by, or total collections to be lower by around 1.5 lakh to 2 lakh crores. Now that the buoyancy is coming back, do you think the government would be little bullish in terms of kind of tax projections in FY27?
I would say that the relief which has already been granted, both in terms of the personal tax and the GST, I think that has really helped the consumption economy. Much of it will depend upon what is the space available for the government to really give any further reliefs. But nevertheless, I would say that maybe there could be some kind of tinkering in terms of when it comes to tax on the interest income of the banks, etc., because that is another area which is actually becoming a bit of a concern, because the deposit growth for the banking system is actually quite is not as strong as it should be. And eventually, for supporting the economic growth, it would be strong banking system will also go a long way. So I think maybe if at all there could be some tinkering in terms of interest on taxation on the interest income. That may be one of the areas which may be touched upon.
Okay, very, very relevant points. We're going to take a very quick break on that note. We'll have R. Gopalan, former finance secretary, and of course, we'll bring on board Abhishek Parikh, group head finance at Warrior Energies as well, into the conversation. But after this, a very quick break.
the heart of process we cover interviews when the I on the this is up now.
And nothing should stop our soldiers from marching forward. To make this possible, somewhere a strong bridge has been built. At Ultratech, India's #1 cement, we believe that to keep growing, India needs
All right, welcome back. Packed panel, of course, and we're also going to be joined by R. Gopalan. But very quickly, let's look at what markets are up to. Nifty has inched back in the green, so that's the one positive that's playing out. IT down 1%, so some of the larger cap sector spaces continue to be under pressure. The Nifty Bank, though, holding on, absolutely flat. I wonder what the Nifty PSU Bank is also doing. Let's pull that one up and see the move with regard to the Nifty PSU Bank. And it's a percent plus lower. Okay, it's recovered from that 1.5% low that it clocked right at the start of trade, but it's down around 0.8% there. In terms of the breadth, it's an extremely tough breadth as well. Within the Nifty 500 universe, the breadth is over 300, declines to around 200 advances. So that breadth also not improving or not looking to improve. The Nifty 50 breadth also currently sitting in the negative. It's 1% or near 1% low on the Nifty small cap, 0.5% low on the Nifty mid cap. So those are severely underperforming the Nifty 50 index, as has been the case. So that's broadly the play. Now today, obviously, it's all about metals, and that move on the Nifty metal, which was down 4%. You've seen a bit of a recovery from that, but it's still 2.5% lower. So it's not looking anywhere close to a full recovery, at least at this point. A percent lower on Nifty IT, I spoke about that. 0.7% lower on the Nifty Realty Index as well within broader markets. FMCG is down 0.5% thereabouts. What's really perking up is the defense index. It's up 2% in trade. So that budget trade really playing out on the Nifty India Defense Index. BL is one of those stocks which is up and away. The other, let's quickly pull up some of those names. A HAL, a Cochin Shipyard, a Mazgon Dock, a GRSE. Let's see what's playing out within that pack. And auto is doing fairly well as well. It seems that the budget trade, again, playing out a bit on the Nifty Auto Index as well. So those two indices have perked up sharply. And when you look at it from the day's low, we're seeing a decent move on both of those because neither of those were in the green at the start of day today. So we've seen a decent move on both of those indices. We'll keep an eye out on both of those indices. Aisha. Okay, let's go across. We have R. Gopalan, former finance secretary, joining us this morning as well. Mr. Gopalan, let me come to you with regard to what the fiscal room or the fiscal space is with regard to where the government is concerned, because essentially all conversations we've had over the last couple of hours boils down to a couple of surprises, and a predominant part of the surprise could well be within the taxation space. Rationalizing maybe, for example, STT and capital gains, giving some benefits to FIIs in terms of tax benefits for investments in India. Do we have that kind of fiscal room? Do you believe we can afford that at this point?
I really don't know. If you look at the fiscal numbers, say we are looking at about last year was, or this year is about 8% on nominal terms. And we need to have at least about 10.5 to 11% in nominal term growth, so as we are able to get enough revenue and therefore enough income to the public and therefore enough savings in the economy. So that's something, how that is going to pan out is something which we need to see. And remember, there are 2, 3 things. We have the Finance Commission award has been given. So to that extent, the sharing, horizontal sharing and vertical sharing will take place, and that will be reflected in this budget at this point in time. And also, please remember, there is a pay commission recommendation, which is though to be paid from next 1/1/27 onwards, but then the point 28 onwards, but then the point remains that it is effective from 1/1/26. So to that extent, there's a huge amount of money that will go out. And look at the debt. The debt is looking at about, we are looking at 56%, and now at the center level, we have to go down to 55%. Of course, there is some room there, because with that, the fiscal deficit from 4.4 to 4.2 is feasible based on the current, nominal growth GDP numbers. It is possible to have a look at. Here, a lot of things. We are given quite a good amount of relief in taxes, both in income tax and the GST. So we need to see how we are able to calibrate in such a way that revenues grow. There's a buoyancy in the revenue. Now, buoyancy to the extent of a 1.2, 1.1, 1.2 will be desirable for us. So let us see how that numbers are going to be fixed there. So based on those numbers only, many expenditure items will, go in this particular budget.
George, sectorally from an equity market perspective, what do you think the budget could touch upon?
So the sectors which has been in the limelight in the last budget was in defense, and you saw railways getting good push. So I think, this budget is not going to be very different. You need to have the same growth agenda playing out from the government side for these sectors. Alongside, the biggest consumption related benefits which has been passed on through GST cut, all those things have to flow in, which again was visible in the case of two-wheelers and four-wheelers to a certain extent through the festive seasons and so on and so forth. But we need to see what kind of consumption pickup is possible also. So capex push to the relevant sectors like which is more linked to the government, and the PSUs has to happen, and that is something which I'll definitely look forward. But at the same time, some SOPs on the agri side, which will definitely benefit, and affordable housing, something which I will look forward.
Abhishek, commodity sell-off is happening as we speak. You are one of the user industry, and you should be happy for it because silver prices are correcting. But how do you look at the entire commodity play from a user industry point of view?
So certainly, if we look at last couple of days and especially last couple of months, the rally on the commodities has been raising far beyond questions that are we really consuming that much of commodity? Has there been real incremental consumption of those commodities at the industrial sector, or is it more of a trading which is playing a larger role? I think that needs a closer look. From industry perspective, what we really see is that consumption has certainly been growing all across. So the incremental capex and incremental consumption of industrial goods certainly will lead to some sort of cushion to the industry price in general, but certainly not in the trajectory that we have seen over last couple of days. Like 30-40% day change in the price is I would say a nightmare for any trader would be. So I think that is something that we may really not consider as conducive for industry, but certainly with the real numbers on ground, it seems that the commodity prices do have a good amount of cushion in terms of consumption, but at a steady state consumption rise of 8 to 10%, not more than that.
But Abhishek, we're looking at India of the future. We're talking about 2047 being Viksit Bharat. Can this budget be that visionary budget wherein companies and sectors such as your come into play? And if so, then what is your ask from the finance minister today?
In fact, last 10 years or last decade, if we look at the budget commentary, it has been the budget which is forward-looking, more reform-oriented, driven by capex from the government. But I think we are standing at a juncture where we look at private capex or private investment to be pushed more through new incentives like ALMM, PLI for solar value chain, for energy storage, and for going ahead for hydrogen electrolyzer is something that will be in focus. We really expect these new sectors, which will not only lead to more capacity buildup, but rather try to create a resilience in terms of energy security, energy continuity, and help in the new age technology businesses like AI and data centers. So we really expect more sort of a push on capex through private sectors, more conducive policy towards the manufacturing, upstream manufacturing, especially on the energy storage, on the hydrogen, as well as something on grid is something that is more expected. Even if you look at the economic survey, what interesting this time was the demand not for more capacities, rather for more integration and resilience of energy supplies through the grid network. And I think that is something that we are really keen to look at in today's commentary.
Interesting, Mr. Khara. Power sector. We have not been talking much about it, but if you are looking at data center capacities of nearly 10 gigawatt by 2030, the kind of power that we need and the kind of integration that Abhishek spoke about, that requires a high amount of capex coming in. Do you think budget will be able to focus on newer sectors for capex?
No, I do agree, because when it comes to the kind of computing which is required and required to be done, if at all we are going for adoption of AI in a big way, then of course even data centers population will actually grow up even significantly. Apart from that, even GCCs also, which is another focus area for the services sector in the days to come, that will also lead to a significant upside as far as the power consumption is concerned. So, when we talk about the power consumption, we have done well in terms of the renewable in last couple of years. But at the same time, when it comes to base load, which is essentially either through thermal or it is through hydel, or now, of course, nuclear is another option. So I think my sense is that, of course, we have not invested so well in terms of thermal and the other options which were there. I think I expect that there could be some focus. Of course, there's a talk now in terms of the nuclear as an option, but of course it will take some time. So I think simultaneously thermal, which is very well there in the economy, maybe we'll have to selectively get into thermal, and we'll have to think in terms of how can we consume the green coal and how can we minimize the transmission, which is actually damaging the environment. So how can we really address to those concerns? To my mind, it is bound to be a focus, because in the days to come, we are going to have significant uptick as far as the electricity demand is concerned in the economy.
Tax incentives for newer sectors like data centers and all, accelerated depreciation. Abhishek spoke about the battery and energy storage system,
Yes.
which is there now with every renewable tender which is coming in. Do you think that could be one of the possibilities that you have accelerated depreciation coming in for some of these sectors?
Yeah, we have seen in the past also, because a couple of years back also there was a tax holiday which was given for the wind power sector at a point of time. Maybe going by that, maybe that is, those are the areas which can actually be looked into from the taxation point of view. When it comes to tax relief per se, in terms of reduction, it may not happen, but tax holidays can perhaps be thought of to ensure that there is a capacity should come up fast, and it should not create a situation where the power is deficit in the economy.
Rohinton, your take on this one?
So I personally feel that the government has already signaled a change, a moving away from tax holidays to more direct benefit type of schemes. So schemes such as PLI are the ones which are prevailing just now, and where they specifically want to give certain benefits to a particular set of industries, then to my mind, the PLI scheme and the other state incentive schemes are the ones that are in play. Even now, if you see, for GIC benefits, where earlier we had Section 10A and 10AA type of benefits, those have been withdrawn, grandfathered, and now we actually have state governments coming out with incentives that if you set up a GIC in a particular area in my state, then these benefits accrue to you. So I see the kind of spectrum changing from a tax holiday to more a direct benefit type of scheme being rolled out.
Okay. Well, I guess that's the government's success. Look at Tata Motors passenger vehicle sales figures. It's a solid uptick on the total sales count itself of almost 47%. The domestic PV sales, which includes EVs, by the way, that's also a staggering 46% jump up. Of course, these are year-on-year numbers. Month on month would be a better and a clearer picture. Tell you what, we'll take a very quick break, come right back. We'll continue our discussion with our ET Now budget think tank.
And nothing should stop our soldiers from marching forward. To make this possible, somewhere a strong bridge has been built. At Ultratech, India's #1 cement, we believe that to keep growing, India needs to keep building. Ultratech Cement. As India builds, India grows. Ever wondered why this long metro line was built? It's just so Papa can reach home early to have his kids jump into his arms with joy. At Ultratech, India's #1 cement, we believe as India builds, India grows. Somewhere, a new road has enabled science to reach a remote village, so that Purni can think of reaching the moon one day. At Ultratech, India's #1 cement, we believe as India builds, India grows.
Welcome back, and this is of course the budget think tank, and what we're trying to get you is insights as to what could come in the budget. Now, of course, outside of the broader numbers and the big picture, really the big question, and let me come to Mr. Gopalan on this one, is the fact that while services, we've done very well on the services side of things. Really what has lagged is manufacturing, and if we were to get to 6.8 to 7.2% in terms of GDP growth, and that's really the target, the aspiration in FY27, what we will likely have to do is we will have to push up manufacturing. Mr. Gopalan, where is it that we're lacking where manufacturing is concerned, and what tweaks within the budget, if any, can be made as a step in that direction?
Okay, let me look at it a little medium term. Today, the problem is the share of GDP in manufacturing is 18% in constant numbers and 12.8% in nominal, numbers. And the gross fixed capital formation in manufacturing has declined from 21% to 16%. So we have a problem. Now, the problem we need to overcome through a number of issues, both short term and medium term. R&D and innovation is an area where we need to focus on. Skilling is another area. I think in this budget, let us see what new measures are getting announced for skilling. The MSMEs is another big area where we need to look at, because MSMEs contribute quite a lot to the exports, the GDP, and to the employment in the country. So how do we ensure that the kind of measures already taken for MSMEs, how they are broadened to ensure that MSMEs are able to get even, capital without, any, collateral or some such thing guaranteed by the government, how that, goes forward. Then tariff reductions to ensure that, on the, global value chain, how are we able to get into that? And tariff reduction is very, very important for that purpose. Obviously, ease of doing business, which we are taking steps, but it needs to go a little further. And how do we, get, in the locations in which these things do happen, like clusters for production, clusters for export. So all these things, how we are able to get that into the budget is going to be some important issues facing manufacturing.
Mr. Khara, that's the important point. Given the kind of global turmoil and flux that we're living in with regards to, the tariff situation and the changing geopolitical world order, do you think export will be a big focus in the budget?
Well, if we look at the composition of our total GDP, it does not really figure out as a very significant component as far as export is concerned. But yes, having said that, I must also mention, when it comes to employment and the quality of employment, this is one of the very important sector. So I think having a focus on this sector will certainly help in terms of ensuring the quality of employment improves in the economy, and which will of course show up in terms of the consumption going up also. So I think the FTAs which have been entered into will certainly support. Having said that, we perhaps cannot ignore the fact that today when it comes to consumption, about 30% of the global consumption is there with US. 17% of the global consumption is there with China. So about 47% of the global consumption is into these two countries. So I think we actually need to really broad base our export markets so that we don't have the impact of this concentration of the potential export destinations. So that is something which we need to address. And I think there also in these markets also, if at all we can enter into, if at all we get into exports of the commodities, which can have the relief in terms of the taxation, this will be another step which perhaps can be thought of. And I think we are having a very clear focus in terms of innovation. We are having a clear focus in terms of coming up with the semiconductor cells, etc., solar cells. We need to capitalize on that. And once we do that, perhaps we'll have a situation where these are the specialized exports which will happen from the economy, which will go a long way in terms of supporting us in terms of employment, in terms of exchange rate stabilization also, and in terms of growth overall.
George, large opportunities available within this manufacturing space for India. What are you seeing in terms of sectors, subsectors being at inflection points? Would aerospace likely feature? Are there any other sectors within manufacturing where India is likely looking at the cusp of possibly the cell phone type or the EMS type revolution within manufacturing? Yeah, to make a case of that.
Yeah, so it's a very interesting time. When you look at the entire capex which is happening currently, and through the support of PLI, it's on EMS space and a few other sectors. But what is needed is the gross capital formation has always been around 35%. It has to be inching up, and when you look at from the success factors what we have seen in the past, which is mostly in defense, railways, mainly because of the government push, but that definitely needs to continue. because the environment is in such a way that the export market, many of the players are not confident enough to take the bets to increase the manufacturing exports, because the export market itself is looking volatile. So the bigger picture in my mind, rather than focusing on, there are a couple of key areas where government needs to focus on, in my mind, is, how we can increase the capital flows when the FDIs are going away, or net FDIs are negative, or FPIs are negative, and the currency is not in a stabilized environment. That is where probably some big measure is required to stabilize all these aspects, so that the environment becomes much more conducive for the businessmen to do the business. Whatever the manufacturing exports or service exports which is happening can be continued and can be made it better. So if you see the services exports is $330 billion exports, even if 10% correction, that means there is a big pressure on the flows towards almost $33 billion, so which is needs to be definitely be looked into in a very, very different light. And that is something which is needed so that the exports, consumption, as well as the capex and related sectors benefits together.
Abhishek, what is the kind of expectation you have from the export point of view? Because you guys also export a lot of panels to the US, and there we're facing a lot of challenges which is there. Is the new FTAs which is getting signed is going to help you diversify into those regions as well?
Certainly, export is a very, I would say, important aspect of growth or trajectory going ahead as well. If you look at the global economies over the last 20 years, so which are the countries which have actually seen more than 7% growth for consistent 20 years are the ones who actually focused on exports. India today, as rightly said by fellow panelists, that has very smaller bet on the export right now. But what we look forward is a larger area to work at. Because if you look at the consumption in India, certainly a very, very conducive numbers we get. We get a lot of comfort from the demand in the domestic market that is increasing. But if we really want to build India as a manufacturing hub, if we really want India to compete at global scale, go out and compete with likes of China, likes of what Vietnam has done, right, likes of what the other smaller countries have been able to demonstrate, I think India is on the right set of point, and we really see hockey stick kind of a growth in exports market. But all we need to look at and consider is we really need to be consistent with the with the policies the way we have seen from the government over last decade. And I think this sort of continuity on the focus of manufacturing sector through policies of Make in India, through policies more helping the export oriented companies to go out and even look at alternate markets. Last 1 year, if you look at the market which closed down, or I would say went into trajectory, but it seemed to be a difficult market to crack after the tariff impact came on. We flipped immediately as a country and started looking at alternate markets to exports, supported with the recent FTAs that have been signed, especially the FTA at the closure which is happening with EU, the FTA with New Zealand, the FTA with Oman, the FTA with Australia. All of these are really opening up new era of Indian manufacturers. Go out, show their skills, because once the scale comes up through the consistent reform, I think we will be in the right point to become the export-oriented economy as well going ahead.
Okay, interesting points there. I just want to check in actually on what the market is doing. And if you ask me what the Nifty is doing, it's doing nothing. It's really manawing a Sunday, or at least waiting for the finance minister's speech. 25,450 is where we're currently at. Absolutely flat, a meager 33-odd point move. But look at individual sectors. Look at what's happening within the entire defense pack. Harsh was just highlighting BEL continues to show leadership, leading the Nifty 2.5% higher for BEL. You've, of course, got a Cochin Shipyard, Mazgaon Dock, Paris Defense. Their entire cluster is holding out very, very smartly. Crompton CG Power. Now, these also very well could be very budget-sensitive trades. Swiggy, of course, is seeing a move after that crash that it had on Friday. Keynes as well is holding up, and I wouldn't be surprised if Dixon, etc., or an RR Cable, etc., the entire EMS theme also could be propping up. These also tend to be very sensitive budget plays. But look at what's happening on the commodity end of the market. MCX, that's cracked now 11.5% almost in futures. The entire silver trade is unwinding. Hindustan Zinc is down 9%. Even Nalco is down about almost 7%. Sentimentally, look at what's happening to Muthoot. That's also down 5% because it also moved up with the rally in gold all through the year. You've got Angel One. I think they also have some commodity trading of a play. That stock also lower by about 3%. But largely it's metals, which is really dragging the markets lower today. And Hindalco, of course, is your top loser today, which is down about almost 3% as we speak right now. But George, purely from a market perspective, I know while the budget can't really do anything much to lift the market sentiment, but hoping against hope, forget what's going to happen on capital taxes as well as gains. But other than that, do you think mentions of tariffs, global uncertainty would at least give some clarity to the market on what the government thinking is and how they're planning to cope up with it all?
Obviously, if you see the manufacturing exports to US is almost, $87 billion, which was under pressure now because most of the businessmen, whom I am talking to, a lot of our clients who are big businessmen, what we realize is that they're all finding it very difficult in the overseas market to understand how the market is shaping up, and daily the tariff-related news flows and the currency movements are killing them. So there is a definite need to stabilize this whole situation in terms of one, the environment in terms of exports, as well as the currency stabilization, and also the incentives with regard to the export-oriented businesses, so that the flows can continue and the exports can be much more in a saner version. So what I realize is that government revenues are, because of the cyclical slowdown what we have seen in earnings, revenue will be under slight pressure. But at the same time, they have to focus on the capex related push, which has been the case for the last 5 years. And especially in the environment like this, more push from the government and alongside the stabilization in the currency market and some color on the tariffs, which is given, definitely markets will take it very, very positively. I think that will stabilize the whole market environment. Today, what you see is that against US dollar, INR is depreciating, and US dollar is depreciating against all other basket of currencies. So in fact, against other basket of currencies, we are depreciating almost 20%, which is very, very scary situation. This needs to be addressed in some way or the other. It could be because of the clarity which government can provide in terms of how the tariff negotiations are going on. That can put a lot of comfort to the export-oriented market, and also the currency will stabilize, which will make it more conducive.
Okay, on that note, let me take a very quick break. But Abhishek, thank you so much for your time. We'll come to you right after this speech. We'll take a very quick break, and then, of course, after that, we'll have our Mukundan President, Designate and CI, and Managing Director and CEO at Tata Chemicals as well, joining in very shortly.
And nothing should stop our soldiers from marching forward. To make this possible, somewhere a strong bridge has been built. At Ultratech, India's #1 cement, we believe that to keep growing, India needs to keep building. Ultratech Cement. As India builds, India grows. Ever wondered why this long metro line was built? It's just so Papa can reach home early to have his kids jump into his arms with joy. At Ultratech, India's #1 cement, we believe as India builds, India grows. Somewhere, a new road has enabled science to reach a remote village, so that Purni can think of reaching the moon one day. At Ultratech, India's #1 cement, we believe as India builds, India grows.
The heart of process we cover activities here. Because when the eye is eye,
Back with the 18 Hour Budget headquarters, we've still got our 18 Hour Budget think tank here with us, and our budget editor joins in after her breakfast break, Radhika Gupta as well. But let me take the industry perspective. And joining us right now is Mr. R. Mukundan, President-designate CII and MD and CEO at Tata Chemicals, joining in on the show right now. Mr. Mukundan, great for your time. Thank you so much. Mr. Mukundan, if I just look at where India stands right now, growth clearly is holding up. But global trade, geopolitics, rates remain volatile globally. Tell me, what's the biggest industry ask? And what do you think is the realistic expectation that the industry should have from the budget today?
So I think you make a very important point. I think while the domestic market is growing and growing well in a robust manner, I think the biggest challenge for us is coming from the external sector, mainly because of the volatility there. And I think what government has done is the right thing. Firstly, when external sector is under threat, I think you focus internally to bring in reforms and then reach out to parts of the market which are willing to work with you to sign FTAs and free trade agreement to boost market access and also give them market access to a very, very fast growing Indian market. And I think this is going to augur well for us. But internally, I think we have already unleashed the reform number 2. But I think in addition to that, to support the FTAs, I think we need to look at what improvements can we make on ease of trading, ease of logistics in and out of Indian ports, Indian airports, and also how to sort of rationalize all the custom duty issues so that that doesn't become a drag on an element which is already challenging for many people. In addition to this, I think we need to continue to focus on manufacturing through targeted PLI schemes. And on top of that, MSME sector should not be forgotten. I think we all know that the MSMEs are backbone of large companies and large investments. So a three-way issue, I think, focus on internal reform while you engage with the external world to build stability. At the same time, manufacturing and MSME.
Right. Mr. Mukundan, some of the FTAs are actually a double-edged sword as well, right? We're going to give away some amount of leeway of domestic industry as well. For example, to the EU, we've given them flexibility with regard to auto. How much of that is a concern for you?
I think it's a big positive. I think if you look at India's exports of auto sector, they have been driven by largely investments coming in from Japan, from Korea. So I think when these companies taste the Indian market, they're not just going to build for India, they're going to build for the globe. So there will be competition in Indian market, Indian consumer will benefit, but at the same time, the quality standards, the standards of the vehicle, the design standards, all are going to improve. And that has a knock-on effect in terms of ensuring not just the international brands, Indian companies also start exporting, accessing the international market. I think Indian manufacturing sector is ready, Indian auto sector is ready. All we are saying is make the internal factor cost more competitive. There are two large internal factor costs. One is power, other one is logistics. As long as we continue to work on them through infrastructure push, I think we would be in the right track. There is also an issue of, how do we continue to upskill our labor, upskill our people strength. I think that's the big push again from the government.
Mr. Mukundan, lastly, private capex has been slower than government capex. What would it take in this budget to meaningfully crowd in private investment back? Because what we're talking about is a Viksit Bharat by 2047, and that capex is going to come at a huge cost. The government can't be always funding it.
So I think this commentary which is there, I think was valid 2 years ago. But if you look at 26, 27, I think a large proportion of the capex has happened from the private sector. There's a 8 and 18% growth. There is about 475,000 crores of capex in only 11 projects, which are more than 20,000 crore each, mainly in electronics, solar energy, and in steel and chemicals. We know that, for example, Chhattisgarh has got the maximum number of private sector capex, which is getting implemented, coming on stream about 15 lakh crore. Then Gujarat and Tamil Nadu have 5 lakh crore each. So we've got state-wise numbers, we've got company-wise numbers. 2,600 companies are investing close to about 16 lakh crore from private sector. And these are specific projects we have tabulated. So it was a right comment maybe 2 years ago when the capacity utilization was not high, but as the capacity utilization reached about 75-80% figure, I think private sector capex has begun to kick in. What we need to do is to ensure that we make the ease of investing, ease of production, ease of manufacturing, ease of logistics continue to be the focus of the government. I think some governments, state governments have done exceedingly well in attracting the capital, but I think central government has also done a lot, including with PLI push, including the push on infrastructure to make sure the private sector capex kicks in. Now, some of the private sector capex which will come going forward actually will not be just Indian capital. These will be foreign companies wanting to invest, especially with the EU FTA once it is signed. There's 6,000 odd companies in India. They're also going to come in and invest for the world. So I think we need to look at this in a very holistic manner. This is a build forward budget, and I think we should continue to build forward.
And here's to that, counting down to the budget. Mr. Mukundan, thank you so much for your time, and we'll see you again post the budget speech as well. Let me also welcome on board now Mr. Anand Goenka, President FICCI and Vice Chairman RPG Group, joining in on the show. Anand, hi, good morning. Good to be speaking with you once again. Anand, I can tell you about the equity markets. The mood is very somber as we go into the equity, trading today. But tell me, how would you describe the mood in the industry right now from the perch that you are at FICCI? Would you say it's confident? Would you say it's cautious? Or would you say it's conflicted or maybe bullish also?
So we have a pre-budget survey that we just got done with from FICCI, and the mood is positive. Growth levels are looking at about 7 to 8% level growths. There is a positivity in terms of private capex coming back, and the risk factors in India are at an all-time low. You look at balance sheets are not leveraged, inflation is under control. overall, besides the external shocks that we are seeing in the world, India is actually an oasis of certainty and comfort.
To you, I think, what is corporate India thinking, given that many businesses are, of course, facing geopolitical headwinds, hurt by tariffs? What is that segment of corporate India expecting from the budget?
Right. So the tariffs that really have had an effect to a certain extent is US, but we are a largely consumption-based economy. The sectors that have got affected are again very specific, whether it is textile apparels, fisheries, leather goods, and so on. So to that extent, the impact on the Indian economy and Indian business has been fairly limited. Government has done a lot of other things to make sure that that impact is lessened with 8 FTAs that have been signed, and the most recent, the mother of all deals, with EU. And that will have a very positive boost on the sectors that have got affected by the US tariffs. As these get ratified, I think there will be a lot of relief, and possibly or hopefully in the budget, maybe some focus on providing relief to these sectors, particularly in MSMEs, will help.
Mr. Goenka, talk to us about where we are at this juncture where private capex is concerned. We're not yet seeing, we're seeing green shoots, but what is it going to take for animal spirits to start to come back? You know, a multi-year kind of cycle, or is that unrealistic to expect?
I think a lot has happened last year to boost consumption. Income tax slabs and then the bigger GST 2.0 that came in October. After that, if you look, demand has started going up quite well. Whether it is the auto sector or the consumer sector, we are seeing a big positive shift. And clearly capacity levels are going up. That will result in increased capex over time. The few things that can be further done is a continued focus on ease of doing business, cost of doing business, focus on power, land, and other factors of production. There's a lot already happened with respect to labor codes, consumption, simplification. I think that journey just has to continue, and more visibility during the budget and going forward will certainly help.
Okay, Anand, great to be speaking with you. Thank you so much for your time today.
Thank you for having me.
Okay, let's just move on. Let's just quickly get your status check. That, by the way, is the countdown. Just 12 minutes to go before the FM is going to begin her budget speech. And one is debating, if it's a Sunday, is it going to be a shorter one or a longer one? What say?
I think she would be around 60 to 70 minutes. That's going to be a shorter one.
Oh, that's how precise you're getting.
I'm going to...
Looking at past trends, she's peaked already and she's now on a sliding scale of reducing the amount of time she speaks. So let's see what happens.
But the tricky stuff is in the fine print, right, Rohit? You've gotten used to that.
It always is.
After
it always is.
The poetry. She's been very good at using some Tamil poetry and quoting some very nice poetry. So short or long, I hope she has the poetry.
But you know the market joke which is already running around, or the meme, so to speak. She's in a red sari today.
Oh, she's in a red sari.
So, George, any thoughts? Yeah, you'll wait to give the verdict tomorrow when the institutional investors come back, right?
Yeah, obviously.
And the Nifty mid-cap has turned green, so that's a positive. So the finance minister may well be in a red sari, but markets clearly brushing off those early woes, and the recovery from the low seems to be quite decent, you know, in that sense. So markets obviously looking upbeat. But you know, we spoke about capex a bit, and Mr. Khara, you have a great sense of how capex has performed maybe over the last 5 years. What's it going to take for the animal spirits to come back where private capex is concerned? Because that could well be the clincher, right, in terms of getting a sense as to what lies thereafter.
I think when it comes to commitment, of course, there is a significant improvement in commitments as far as capital expenditure is concerned from private sector. But yes, the animal spirit which you are talking about, it will probably warrant some kind of a certainty as far as the global environment is concerned. Yeah. Because unless and until there is a certainty on that, perhaps we may have challenge in terms of animal spirit coming back. But nevertheless, I must also mention that the capex which is happening in the newer industries, which is green, particularly battery and EVs, and also cell manufacturing, etc., that is actually quite encouraging. And apart from that, the defense sector is another one which is showing a very promising outcome. So I think these are some of the sectors which will probably now take the leap forward and probably generate the animal spirit also.
Okay, an absolutely flat market. It's only a few odd sectors, select autos, wherein the monthly sales numbers have been good. Defense, of course, and the entire EMS play is what is keeping the market afloat. L&T, Eicher, M&M, they are back to the fore. Maruti as well has now inched up higher. But on the flip side, it's a bit of a tug of war because you've got IT, some of the select FMCG names, and metals are the ones. Anything to do with metals or precious metals, that's really down and out in trade. But the one voice that all of us have been waiting for, consulting editor ET Now, Swaminathan Iyer, joining in to tell us what he's expecting from the budget. Swami sir, good morning. And don't tell me casual leaves should be done away with. We're already having a working Sunday here. But your top three asks from the budget this time, what should the market look out for?
Well, I'd say that, this is, I hope this is a tough budget. That is, as they say, there is an election cycle where the first budget is a very soft one because you just won it. The last one has to be full of freebies because the election is coming. So the third budget, the one in between, is the time to get tough. And as I've said on many occasions, I think the one thing that you can really get tough on is the fertilizer subsidy. It is the one big missing reform in all this time, and Mr. Modi has talked about reform and various other things. Well, why are you not reforming the fertilizer subsidy? So I do hope that she will make a start in that. I also hope that, lots of people think the fiscal deficit, she'll reduce it to 4.2. I would like her to make an attempt to get it down even further. We have a very long way to go before we can get our debt to GDP ratio down to the desired 40% target that we're having right now. It's like 56% right now, long way to go. And this will require, therefore, fiscal discipline for a great many years ahead. Given that, after the third budget, the fourth and fifth have to be relatively soft because of coming elections, I do hope she will surprise us by reducing the fiscal deficit even below 4.2, maybe 4.1. 4.0 would be very, very good. So while others, I find, are emphasizing capex and various others as though you have to stimulate a budget, I would say rather that the third budget of a government should be the one that is a tough budget. And I hope it is one in which the fiscal consolidation will surprise by being much sterner than expected. And I hope that one way of getting the fiscal deficit down would be to start reforming this fertilizer subsidy. Mr. Chidambaram reformed the diesel subsidy when he was finance minister by changing the price of diesel a few paise every week or so. And you can do the same for fertilizer. You cannot afford to do a huge cut in the fertilizer subsidy immediately. There will be an uproar. But if you keep doing it, small amounts, a few paisa week after week, then over 2 years or 3 years, you can finally even it out. So we know now how it's to be done. Let us hope that Nirmala Sitharaman is able to catch this particular bear by the ruff and control it at long last.
Hi, Swaminathan sir. This is Radhika Gupta. I am budget editor today for ET Now, so I'm taking the liberty to ask you a question. Since you mentioned fiscal math, how do you see government and state borrowing? And do you think state borrowing, rising state borrowing is a source of concern? It's something the government and center has to think about?
Swami sir, let me try and take that question. Is the rising burden with regard to state finances a concern in your opinion, and is this something that needs to be solved for?
We reduce gradually.
Okay. All right, we have him on a slightly difficult line, so we'll get that patched. Yeah.
Check with Mr. Khara.
Yes.
Swaminathan Iyer was talking about tackling the fertilizer subsidies there. Do you think the government will go for direct benefit as far as fertilizer subsidies is concerned now?
That could be an option which can perhaps be explored. To my mind, when it comes to ensuring that it goes to the right hands, and also the leakages in the subsidies could be avoided. Perhaps we have seen in the past also, DBT has proved to be a very successful option. Maybe it can be looked into.
And that would be, George, it would be a good thing for fertilizer companies. They don't have to wait for the government grants coming back to them. It will be on the spot and good for the working capital as well.
If you look at the agrochemical companies have been going through a tough time in the last few years. Last 3.5-4 years. So definitely any agri push, anything related to the state government easing of their finances, because the budget deficit from states have been going up, and which eases in any shape or form can be very positive for these sectors.
Do we have Swami sir back with us, Swaminathan Iyer? Okay, not yet. We'll wait by for him. Just looking at the markets, nothing at all really. Not moving much. It's the usual suspects, your BEL, CG Power, Crompton, Keynes. Hudco has moved up about almost 3% or so. Tata Motors PV, after those monthly sales numbers, that's inched up about almost 2.25% as we speak. ONGC, of course, is holding out very well. Sajid, you were mentioning the rationale why. L&T, Reliance, etc. is looking good. George, irrespective of what happens in the budget or not, is the market screaming value in pockets right now after the underperformance? Forget what will happen in the budget.
Absolutely. If you look at Nifty 50, we have been telling our investors, if you see Nifty 50 companies relative to the mid and small cap, it is trading at a 2-decade low valuations.
Yeah.
So because, FIs have been exiting Nifty 50 companies, or they are selling off aggressively, and the mutual fund inflows have been significantly concentrated on the mid and small cap space. So there is a gap which has been created. In my last 25 years of WorkX, I have not seen this kind of disparity in the valuation. And, Nifty 50 as a pocket of value looks screaming to me relative to the mid and small cap.
Would Radhika, would you also tend to agree with that? Or do you believe that this bout of underperformance we've seen within the Nifty small and mid cap basket actually offers an opportunity to us?
So I think the top, George mentioned the Nifty 50. I actually think the Nifty Junior segment, which is the next 50 stocks, and of course a lot of them have metals heavyweights as well. But it's been a laggard for a very, very long time. Yes. So that offers value. I also think the mid-cap segment tends to get a lot of hate, but now that's 33,000 crore to 1 lakh crore market cap companies. And if you look at earnings disappointments, mid-caps have been the least disappointing. They've actually done the best job on the earnings front. So I think the 50 to 200 company point actually is a very, very interesting point today.
Okay. Swami sir, I'll go back to the question that we posed, or rather that Radhika posed. I'll go on behalf of you, Radhika. But Swami sir, if you can give us a sense of what you think of state finances. Are they in a difficult position? Can we kind of improve them? How quickly? How dramatically?
You mean the government finances?
State finances.
State finances are not in very good shape. The central government had allowed them to run deficits going up to 3.5% of GDP, and that is to gradually come down. I think they will have to make a significant effort. As I said, in the election cycle, the third year is a good time to go ahead with tough measures. In that case, that should apply to the states too. I would like to point out that of the elections taking place this year, the BJP is not a significant player in the south, in Tamil Nadu, Kerala. It is almost definitely going to win in Assam, and I suspect almost certainly going to lose in West Bengal. In these kinds of circumstances, I don't think the budget has to worry about wooing people in the elections. It probably will not do so. So in these circumstances, can you tighten up on the state finances? Can you tell them, well, you need to try and get it down to 3% of GDP, I think the answer is you must try in this direction. The political economy is just right for this. This is the correct year for tightening the screws, for reducing both the central fiscal deficit and making it clear to the states that they cannot continue at 3.5% forever, and they do need to come down to 3%.
Okay, on that note, that's the countdown hour. Within seconds from now, we will have the budget speech begin. It's 11 a.m. already. This is the Super Sunday that we'd all been waiting for, the 11 a.m. speech. And let's see what the finance minister has to deliver. We're already getting the live visuals now from the parliament where she's going to present the budget shortly from now.
Okay, very interesting. You can have those live visuals.
Srimati Nirmala Sitharaman ji. Item number 1. Item number 1.
Sir, with your permission, I rise to lay on the table a copy each of the following papers, Hindi and English versions, under Article 281 of the Constitution, Report for 2026 to 2031, Volume 1, Main Report of the 16th Finance Commission. 2. Report for 2026-2031, Volume 2, Annexures of the 16th Finance Commission. Number 3. Explanatory memorandum as to the action taken on the recommendations contained in the above report.
Item number 2, माननीय वित्त मंत्री निर्मला सीतारमण जी.
Honorable Speaker, sir, on the sacred occasion of Magh Purnima and the birth anniversary of Guru Ravidas, I present the budget for the year 2026-2027. Since we assumed office 12 years ago, India's economic trajectory has been marked by stability, fiscal discipline, sustained growth, and moderate inflation. This is the result of conscious choices we have made, even in times heightened uncertainty and disruption. Our government, led by Honorable Prime Minister Modi, has decisively and consistently chosen action over ambivalence, reform over rhetoric, and people over populism. We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment. Keeping Atmanirbharta as a lodestar, we have built domestic manufacturing capacity, energy security, and reduced critical import dependencies. Simultaneously, we have ensured that citizens benefit from every action of the government, undertaking reforms to support employment generation, agricultural productivity, household purchasing power, and universal services to people. These measures have delivered a high growth rate of around 7% and helped us make substantial strides in poverty reduction and improvement in the lives of our people. Today, we face an external environment in which trade and multilateralism are imperiled and access to resources and supply chains are disrupted. New technologies are transforming production systems while sharply increasing demands on water, energy, and critical minerals. India will continue to take confident steps towards Vikasit Bharat, balancing ambition with inclusion. As a growing economy with expanding trade and capital needs, India must also remain deeply integrated with global markets, exporting more and attracting stable long-term investment. As I begin part A I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. Our aim is to transform aspiration into achievement and potential into performance as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Vikasit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti-driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by three Kartavya. Our first Kartavya is to accelerate and sustain economic growth by enhancing productivity and competitiveness and building resilience to volatile global dynamics. Our second Kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third Kartavya, aligned with our vision of Sabka Saath, Sabka Vikas, is to ensure that every family, community, region, and sector has access to resources, amenities, and opportunities for meaningful participation. This threefold approach requires a supportive ecosystem. The first requirement is to sustain the momentum of structural reforms, continuous, adaptive, and forward-looking. Second, a robust and resilient financial sector is central to mobilizing savings, allocating capital efficiently, and managing risks. Third, cutting-edge technologies, including AI applications, can serve us as force multipliers for better governance. Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025, over 350 reforms have been rolled out. This includes GST simplification, notification of labor codes, and rationalization of mandatory quality control orders. High-level committees have been formed, and in parallel, the central government is working with the state governments on deregulation and reducing compliance requirements. The Reform Express is well on its way and will maintain its momentum to help us fulfill our Kartavya. I now move to specific proposals. Under our first Kartavya, to accelerate and sustain economic growth, I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions. Scaling up of manufacturing in 7 strategic and frontier sectors. Biopharma Shakti, meaning biopharma strategy for health advancement through knowledge, technology, and innovation. India's disease burden is observed to be shifting towards non-communicable diseases. like diabetes, cancer, and autoimmune disorders. Biologic medicines are key to longevity and quality of life at affordable costs. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. The strategy will include a biopharma-focused network with 3 new national institutes of pharmaceutical education and research, popularly known as NIPERs, and upgrading 7 existing ones. It will also create a network of 1,000 accredited India clinical trials sites. We propose to strengthen the Central Drug Standard Control Organization to meet global standards and approve timeframes through approval timeframes through a dedicated scientific review cadre and specialists. India's semiconductor mission 1.0 expanded India's semiconductor capabilities. Building on this, we will launch ISM 2.0 to produce equipment and materials, design full-stack Indian IP, and fortify supply chains. We will also focus on industry-led research and training centers to develop technology and skilled workforce. The Electronics Components Manufacturing Scheme, launched in April 2025, with an outlay of 22,919 crores, already has investment commitments at double the targets. We propose to increase the outlay to 40,000 crores to capitalize on this momentum. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh, and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research, and manufacturing. To enhance domestic chemical production and reduce import dependency, we will launch a scheme to support states in establishing 3 dedicated chemical parks through challenge route on a cluster-based plug-and-play model. Strong capital goods. Strong capital goods capability is a determinant of productivity and quality across different sectors. Towards building this capacity, I propose the following. High-tech tool rooms will be established by central public sector enterprises at 2 locations as digitally enabled automated service bureaus that locally design, test, and manufacture high-precision components at scale and at lower cost. 2. A scheme for enhancement of construction and infrastructure equipments will be introduced to strengthen domestic manufacturing of high value and technologically advanced CIE. This can range from lifts in a multi-storied apartment or firefighting equipment in multiplexes, large or small, and to tunnel boring equipments for building metros and high-altitude roads. I also propose a scheme for container manufacturing to create a globally competitive container manufacturing ecosystem with a budgetary allocation of 10,000 crores over a 5-year period. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for self-reliance in natural fibers, such as silk, wool, and jute, man-made fibers, and new-age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom, and handicrafts. This will help in global market linkage and branding. It will streamline and support training, skilling, quality of process, and production. This will benefit our weavers, village industries, one district, one product, ODOP initiative, and also our rural youth. India has the potential to emerge as a global hub for high quality, affordable sports goods. I propose a dedicated initiative for sports goods that will promote manufacturing, research, and innovation in equipment design as well as material sciences. Rejuvenation of legacy industrial clusters. I propose to introduce a scheme to revive 200 legacy industrial clusters to improve their cost competitiveness and efficiency through infrastructure and technology upgradation. Creating champion SMEs and supporting micro enterprises. Recognizing MSMEs as a vital engine of growth, I propose a three-pronged approach to help them grow as champions. Equity support. I propose to introduce a dedicated 10,000 crores SME growth fund to create future champions, incentivizing enterprises based on select criteria. I also propose to top up the Self-Reliant India Fund set up in 2021 with 2,000 crores to continue support to micro enterprises and maintain their access to risk capital. Liquidity support. With TREDS, more than 7 lakh crore has been made available to MSMEs. To leverage its full potential, I propose 4 measures. 1. Mandate TREDS as the transaction settlement platform for all purchases from MSMEs by CPSEs, serving as a benchmark for other corporates. 2. Introduce a credit guarantee support mechanism through CGTMSE for invoice discounting on TREDS platform. 3. Link GEM with TREDS for sharing information with financiers about government purchases from MSMEs, encouraging cheaper and quicker financing. 4. Introduce TREDS receivables as asset-backed securities, helping develop a secondary market, enhancing liquidity and settlement of transactions. Professional support. Government will facilitate professional institutions such as the ICAI, ICSI, ICMAI to design short-term modular courses and practical tools to develop a cadre of corporate mitras, especially in Tier 2 and Tier 3 towns. These accredited para-professionals will help MSMEs meet compliance requirements at affordable costs. Infrastructure. During this past decade, our government has undertaken several initiatives for large-scale enhancement of public infrastructure, including through new financing instruments such as Infrastructure Investment Trust (InvITs) and Real Estate Investment Trust (REITs), and institutions like NIIF and NABFID. We shall continue to focus on developing infrastructure in cities with over 5 lakh population, that is Tier 2, Tier 3 cities, which have expanded to become growth centers. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. To strengthen the confidence of private developers regarding risks during infrastructure development and construction phase, I propose to set up an infrastructure risk guarantee fund to provide prudentially calibrated partial credit guarantee to lenders. Over the years, REITs have emerged as a successful instrument for asset monetization. I propose to accelerate recycling of significant real estate assets of the CPSEs through the setting up of dedicated REITs. To promote environmentally sustainable movement of cargo, I propose to 1. Establish new dedicated freight corridors connecting Dankuni in the east to Surat in the west. Operationalize 20 new national waterways over the next 5 years, starting with National Waterways 5 in Orissa to connect mineral-rich areas of Talcher and Angul and industrial centers like Kalinga Nagar to the ports of Paradeep and Dhamra. Training institutes will be set up as regional centers of excellence for development of required manpower for these waterways. This will benefit youth in the entire stretch of the waterways to train and acquire skills. Further, a ship repair ecosystem catering to inland waterways will also be set up at Varanasi and Patna. And C, launch a coastal cargo promotion scheme for incentivizing a modal shift from rail to road to increase the share of inland waterways and coastal shipping from 6% to 12% by 2047. To enhance last mile and remote connectivity and promote tourism, I propose to give incentives to indigenize manufacturing of seaplanes. A seaplane wheel scheme will be also introduced to provide support for operations. Carbon capture, utilization and storage. Aligning with the roadmap launched in December 2025, the carbon capture, utilization and storage technologies at scale will achieve higher readiness and in end-use application across 5 industrial sectors, including power, steel, cement, refineries, and chemicals. An outlay of 20,000 crore is proposed over the next 5 years for this purpose. City economic regions. Cities are India's engines of growth, innovation, and opportunities. We shall now focus on Tier 2, Tier 3 cities, and even temple towns, which need modern infrastructure and basic amenities. This budget aims to further amplify the potential of cities to deliver the economic power of agglomerations by mapping city economic regions based on their specific growth drivers. An allocation of 5,000 crore per CER over 5 years is proposed for implementing their plans through a challenge mode with a reform come result-based financing mechanism. In order to promote environmentally sustainable passenger systems, we will develop 7 high-speed rail corridors between cities as growth connectors, namely Mumbai to Pune, Pune to Hyderabad, Hyderabad to Bengaluru, Hyderabad to Chennai, Chennai to Bengaluru, Delhi to Varanasi, Varanasi to Siliguri. Financial sector. The Indian banking sector today is characterized by a strong balance sheet, historic highs in profitability, improved asset quality, and coverage exceeding 98% of villages in the country. At this juncture, we are well placed to futuristically evaluate the measures needed to continue on the path of reform-led growth of this sector. I propose setting up a high-level committee on banking for Vikasit Bharat. High-level committee on banking for Vikasit Bharat to comprehensively review the sector and align it with India's next phase of growth, while safeguarding financial stability, inclusion, and consumer protection. The vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs. As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. I propose to introduce a market-making framework with suitable access to funds and derivatives on corporate bond indices. I also propose to introduce total return swaps on corporate bonds. Municipal bonds. To encourage the issuance of municipal bonds of higher value by larger cities, I propose an incentive of 100 crore rupees for a single bond issuance. 100 crore rupees for a single bond issuance of more than 1,000 crore. The current scheme under Amrit which incentivizes issuances up to 200 crores only, will also continue to support smaller and medium towns. That will also continue to support the smaller and medium towns. Ease of doing business. Individual persons resident outside India, PROI, will be permitted to invest in equity instruments of listed Indian companies through the Portfolio Investment Scheme. It is also proposed to increase the investment limit for an individual PROI under the scheme from 5% to 10%, with an overall investment limit for all individual PROIs to 24% from the current 10%. Emerging technologies including AI. 21st century is technology driven. Adoption of technology is for the benefit of all people. Farmers in the field, women in STEM, youth keen to upskill, and Divyangjan to access newer opportunities. The government has taken several steps to support new technologies through AI Mission, National Quantum Mission, Anusandhan National Research Fund, and Research and Development and Innovation Fund. Our second kartavya is to fulfill aspirations and build capacities. Close to 25 crore individuals have come out of multi-dimensional poverty through a decade of our government's sustained and reform-oriented efforts. Our government has therefore decided to place a renewed emphasis on the service sector to provide a pathway to fulfilling aspirations of a youthful India with the following measures. I propose to set up a high-powered education to employment and enterprises standing committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment, and exports. They will also assess the impact of emerging technologies, including AI, on jobs and skill requirements and propose measures thereof. To create a range of skilled career pathways, a new range of skilled career pathways for our youth, I propose interventions in the following sectors. Health. Existing institutions for allied health professionals will be upgraded and new AHP institutions established in private and government sectors. This will cover 10 selected disciplines, including optometry, radiology, anesthesia, OT technology, applied psychology and behavioral health, and add 1 lakh AHPs over the next 5 years. A strong care system covering geriatric and allied care services will be built. A variety of NSQF aligned programs will be developed to train multi-skilled caregivers, combining core care and allied skills such as wellness, yoga, and operation of medical assistive devices. In the coming year, 1.5 lakh caregivers will be trained. Hubs for medical value tourism. To promote India as a hub for medical tourism services, I propose to launch a scheme to support states in establishing 5 regional medical hubs in partnership with the private sector. These hubs will serve as integrated healthcare complexes that combine medical, educational, and research facilities. They will have Ayush centers, medical value tourism facilitation centers, and infrastructure for diagnostics, post-care, and rehabilitation. These hubs will provide diverse opportunities, job opportunities for health professionals, including doctors and AHPs. Ancient Indian yoga, already respected in several parts of the world, was given a mass global recognition when Honorable Prime Minister took it to the UN. Post-COVID, Ayurveda gained a similar global acceptance and recognition. Exporting quality Ayurveda products helps farmers who grow the herbs and youth who process the products. To meet growing global demand, a few more steps are being taken. I propose to 1. Set up 3 new All India Institutes of Ayurveda. 2. Upgrade Ayush pharmacies and drug testing labs for higher standards of certification ecosystem, and make available more skilled personnel. 3. Upgrade the WHO Global Traditional Medicine Center in Jamnagar to bolster evidence-based research, training, and awareness for traditional medicine. Animal husbandry. Livestock contributes to close to 16% of farm income, including of poor and marginal households. To scale up availability of veterinary professionals by more than 20,000, I propose to roll out a loan-linked capital subsidy support scheme for establishment of veterinary and para-veterinary colleges, veterinary hospitals, diagnostic laboratories, and breeding facilities in private sector. Collaboration between Indian and foreign institutions will also be facilitated. Orange economy. India's animation, visual effects, gaming and comics sector, AVGC sector, is a growing industry projected to require 2 million professionals by 2030. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up AVGC content creator labs in 15,000 secondary schools all over the country and 500 colleges. The Indian design industry is expanding rapidly, and yet there is a shortage of Indian designers. I propose to establish, through Challenge Route, a new National Institute of Design to boost design education and development in the eastern region of India. Education. Our government will support states through Challenge Route in creating 5 university townships in the vicinity of major industrial and logistics corridors. These planned academic zones will host multiple universities, colleges, and research institutions, skill centers, and residential complexes. In higher education, STEM institutions, prolonged hours of study and laboratory work pose some challenges for girl students. Through VGF, viability gap funding and capital support, one girls' hostel will be established in every district. To promote astrophysics and astronomy via immersive experiences, 4 telescope infrastructure facilities will be set up or upgraded. The National Large Solar Telescope, the National Large Optical Infrared Telescope, the Himalayan Chandra Telescope, and the Cosmos 2 Planetarium. Tourism. The tourism sector has the potential to play a large role in the employment generation, forex earnings, and expanding the local economy. I propose to set up a National Institute of Hospitality by upgrading the existing National Council for Hotel Management and Catering Technology. It will function as a bridge between academia, industry, and government. I also propose a pilot scheme for upskilling 10,000 guides in 20 iconic tourist sites through a standardized, high-quality, 12-week training course in hybrid mode in collaboration with the Indian Institute of Management. A national destination digital knowledge grid will be established to digitally document all places of significance, cultural, spiritual, and heritage. This initiative will create a new ecosystem of jobs for local researchers, historians, content creators, and technology partners. India has the potential and opportunity to offer world-class trekking and hiking experience. We will develop ecologically sustainable mountain trails in Himachal Pradesh, Uttarakhand, and Jammu Kashmir. Also in Araku Valley in the Eastern Ghats and Podigai Malai in the Western Ghats. Turtle trails along key nesting sites in the coastal areas of Odisha, Karnataka, and Kerala. And 3, bird watching trails along the Pulikat Lake in Andhra Pradesh, Tamil Nadu. It's on the border. Under the visionary leadership of Honorable Prime Minister, we established the International Big Cat Alliance in 2024. This year, India is hosting the first ever Global Big Cat Summit, where heads of governments and ministers from 95 range countries will deliberate on collective strategies for conservation. Heritage and culture tourism. I propose to develop 15 archaeological sites, including Lothal, Dolavira, Rakhigarhi, Adichanallur, Saranath, Hastinapur, and Leh Palace into vibrant experiential cultural destinations. Excavated landscapes will be open to the public through curated walkways. Immersive storytelling skills and technologies will be introduced to help conservation labs, interpretation centers, and guides. The sports sector provides multiple means of employment, skilling, and job opportunities. Taking forward the systematic nurturing of sports talent, which is set in motion through the Khelo India program earlier, I propose to launch a Khelo India mission to transform the sports sector over the next decade. The mission will facilitate an integrated talent development pathway supported by training centers, which are foundational, intermediate, and elite levels. B, systematic development of coaches and support staff. C, integration of sports science and technology. D, competitions and leagues to promote sports culture and provide platforms. And E, development of sports infrastructure for training and competition. Our third Kartavya aligns with our vision of Sabka Saath, Sabka Vikas towards Vikasit Bharat. This requires targeted efforts for 1, increasing farmer incomes through productivity enhancement and entrepreneurship, with special attention to small and marginal farmers. B, empowering Divyangjan through access to livelihood opportunities, training, and high-quality assistive devices. C, empowering the vulnerable to access mental health and trauma care. D, focus on the Purvodaya states and the Northeast region to accelerate development and employment opportunities. Fisheries. We will undertake initiatives for integrated development of 500 reservoirs and Amrit Sarovars. 2, strengthen the fisheries value chain in coastal areas and enable market linkages involving startups and women-led groups together with fish farmer producer organizations. Animal husbandry. To provide quality employment opportunities in rural and peri-urban areas, we will support the animal husbandry sector in entrepreneurship development through A, credit-linked subsidy program, B, scaling up and modernization of livestock enterprises, C, enhanced creation of livestock, dairy, and poultry, enhanced creation of livestock, dairy, and poultry-focused integrated value chains, And D, encourage creation of livestock farmer producer organizations. High value agriculture. To diversify farm outputs, increase productivity, enhance farmers' incomes, and create new employment opportunities, we will support high-value crops such as coconut, sandalwood, cocoa, cashew in the coastal areas, agar trees in northeast, and nuts such as almonds, walnuts, and pine nuts in our hilly regions. These, all of them, will be supported. India is the world's largest producer of coconuts. About 30 million people, including nearly 10 million farmers, depend on coconuts for their livelihood. To further enhance competitiveness in coconut production, I propose a coconut promotion scheme to increase production and enhance productivity through various interventions, including replacing and non-productive trees with new saplings or plants or varieties in major coconut growing states. A dedicated program is proposed for Indian cashew and cocoa to make India self-reliant in raw cashew and coconut production and processing, enhance export competitiveness, and transform Indian cashew and Indian cocoa into premium global brands by 2030. Sandalwood. Sandalwood is closely linked to India's social and cultural heritage. Our government will partner with state governments to promote focused cultivation and post-harvest processing to restore the glory of the Indian sandalwood ecosystem, to rejuvenate old, low-yielding orchards, and expand high-density cultivation of walnuts, almonds, and pine nuts. We will support a dedicated program to enhance farmer incomes and in bringing value addition by engaging youth. Bharat Vistar, that is virtually integrated system to access agricultural resources. I propose to launch Bharat Vistar, a multilingual AI tool that shall integrate the AgriStack portals and the ICAR package on agricultural practices with AI systems. This will enhance farm productivity, enable better decisions for farmers, and reduce risk by providing customized advisory support. She Marts for rural women-led enterprises. Building on the success of Lakpati Didi program, I propose to help women take the next step from credit-linked livelihoods to being owners of enterprises. Self-help entrepreneur, She Marts will be set up as community-owned retail outlets within the cluster-level federations through enhanced and innovative financing instruments. Empowering Divyangjan. Divyangjan Kaushal Yojana. Information technology, AVGC sectors, hospitality and food and beverages sectors often offer task-oriented and process-driven roles which are suitable for Divyangjan. We will ensure dignified livelihood opportunities through industry-relevant and customized training specific to each Divyangjan group. Divyang Sahara Yojana. Timely access to high-quality assistive devices for all eligible Divyangjan is a fundamental need. I propose to 1. Support the Artificial Limbs Manufacturing Corporation of India, ALIMCO, to set up and to scale up production of assistive devices, invest in R&D and AI integration, strengthen PM Divyasha Kendras, and support setting up of assistive technology marts as modern retail style centers where Divyangjan and senior citizens can see, try, and purchase assistive products. Reaffirming our commitment to mental health and trauma care. There are no national institutes for mental health care in North India. We will therefore set up a NIMHANS 2 and also upgrade national mental health institutes in Ranchi and in Tezpur as regional apex institutions. Emergencies expose families, particularly the poor and vulnerable, to unexpected expenditure. We will strengthen and increase these capacities by 50% in district hospitals by establishing emergency and trauma care centers. Focus on Purvodaya states and northeastern regions. Purvodaya, I propose the development of an integrated East Coast industrial corridor with a well-connected node at Durgapur, creation of 5 tourism destinations in 5 Purvodaya states, and the provision of 4,000 e-buses. Buddhist sites in northeastern region. The northeastern region is a civilizational confluence of Theravada and Mahayana or Vajrayana traditions. I propose to launch a scheme for development of Buddhist circuits in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram, and Tripura. The scheme will cover preservation of temples and monasteries, pilgrimage interpretation centers, connectivity, and pilgrim amenities. 16th Finance Commission. On 17th November 2025, the 16th Finance Commission submitted its report to the President. As mandated under Article 281 of the Constitution, the government is to lay the report along with the explanatory memorandum on the action taken on the recommendations of the Commission in Parliament, which, Sir, Honourable Speaker, you've allowed me to do at the commencement of the session. The government has accepted the recommendation of the Commission to retain the vertical share of devolution at 41%. As recommended by the Commission, I have provided 1.4 lakh crores of rupees to the states for the year 2026-2027 as Finance Commission grants. These include rural and urban local body and disaster management grants. Fiscal consolidation. Government has been delivering on our fiscal commitments consistently without compromising on social needs. To strive towards accepted standards of fiscal management in Budget 25-26, I had indicated that the central government would target reaching a debt to GDP ratio of 50 plus or minus 1% by 2030-31. In line with this, the debt to GDP ratio is estimated to be 55.6% of GDP in BE 26-27, compared to 56.1% of GDP in RE 25-26. Declining debt to GDP ratio will gradually free up resources for priority sector lending and expenditure by reducing the outgo on interest payments. One of the main operational instruments for debt targeting is the fiscal deficit. I am happy to inform this august House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. The revised estimates of the non-debt receipts are 34 lakh crore rupees, of which the centre's net tax receipts are 26.7 lakh crore. The revised estimate of the total expenditure is 49.6 lakh crore rupees, of which the capital expenditure is about 11 lakh crores. Budget estimates 2026 to 2027. Coming to 26-27, the non-debt receipts and the total expenditure are estimated as 36.5 lakh crore and 53.5 lakh crore respectively. The centre's net tax receipts are estimated at 28.7 lakh crore rupees. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.7 lakh crore rupees. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 17.2 lakh crore rupees. I'll now move to Part B. Part B, direct taxes. Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly, giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living. I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of 1% or 2% only. I propose a scheme for small taxpayers, wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns. Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely, A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing report, and default in furnishing statement for financial transactions are proposed to be converted into fee. I propose to rationalize prosecution framework under Income Tax Act while maintaining a careful balance for deterrence in some serious offence. Non-production of books of account and documents and requirement of TDS payment where payment is made in kind are being decriminalized. Further, minor offences will attract fine only. The remaining prosecutions will be graded commensurate with the quantum of offence. They will entail only simple imprisonment with maximum imprisonment reduced to 2 years and power to courts to convert even those into fines. There is no penalty. There is no penalty presently for disclosure of non-immovable foreign assets with aggregate value less than 20 lakh rupees. I propose to also provide them with immunity from prosecution with retrospective effect from 1/10/2024. Cooperatives. Deduction is already allowed to a primary cooperative society engaged in supplying milk, oilseeds, fruits or vegetables raised or grown by its members. I propose to extend this deduction to also include supply of cattle feed and cotton seed produced by its members. I propose to allow inter-cooperative society dividend income as deduction under the new tax regime to the extent it is further distributed to its members. I further propose to allow exemption for a period of 3 years to dividend income received by a notified national cooperative federation on their investments made in companies up to 31/1/2026. This exemption would be allowed only for dividends further distributed to its member cooperatives. Supporting IT sector as India's growth engine. India is a global leader in software development services, IT-enabled services, knowledge process outsourcing services, and contract R&D services relating to software development. These businesses and their segments are quite interconnected with each other. All these services are proposed to be clubbed under a single category of information technology services with a common safe harbor margin of 15.5% applicable to all. The threshold for availing safe harbor for IT services is being enhanced substantially from 300 crore rupees to 2,000 crore rupees. Safe harbor for IT services shall be approved by an automated rule-driven process without any need for tax officer to examine and accept the application. Once applied by an IT services company, the same safe harbor can be continued for a period of 5 years at a stretch at its choice. For IT services companies who want to conclude advanced pricing agreement, APA, I propose to fast-track unilateral APA process for IT services and endeavor to conclude it within a period of 2 years. The period of 2 years can be extended by a further period of 6 months on taxpayers' request. I propose to extend the facility of modified returns available to the entity entering APA to its associated entities also. Acting global business and investment. Recognizing the need to enable critical infrastructure and boost investment in data centers, I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I also propose to provide a safe harbor of 15% on cost in case the company providing data center services from India is a related entity. To harness the efficiency of just-in-time logistics for electronic manufacturing, I propose to provide safe harbor to non-residents for component warehousing in a bonded warehouse at a profit margin of 2% of the invoice value. The resultant tax of about 0.7% will be much lower than in competing jurisdictions. To provide fillip to toll manufacturing in India, I propose to provide exemption from income tax for 5 years to any non-resident who provides capital goods, equipment, or tooling to any toll manufacturer in a bonded zone. To encourage vast pool of global talent to work in India for a longer period of time, I propose to provide exemption to global, non-India sourced income of a non-resident expert for a stay period of 5 years under notified schemes. I propose to provide exemption from minimum alternate tax, the MAT, to all non-residents who pay tax on presumptive basis. Tax administration. I propose to constitute a joint committee of Ministry of Corporate Affairs and Central Board of Direct Taxes for incorporating the requirements of income computation and disclosure standards, the ICDS, in the Indian Accounting Standards, IND AS itself. Separate accounting requirement based on ICDS will be done away with from the tax year 27-28. To support Prime Minister Modi's vision of homegrown accounting and advisory firms to become global leaders, I propose to rationalize the definition of accountant for the purposes of safe harbor rules. Other proposals. Change in taxation of buyback was brought in to address the improper use of buyback route by promoters. In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. TCS rate for sellers of specific goods, namely alcoholic liquor, scrap, and minerals, will be rationalized to 2%, and that on tendu leaves will be reduced from 5% to 2%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is proposed to be made final tax, so there will be no further credit accumulation from 1st April 2026. In line with this change, the rate of final tax is being reduced to 14% from the current MAT rate of 15%. The brought forward MAT credit of taxpayers accumulated till 30th March 2026 will continue to be available to them for set-off as above. Indirect taxes. I shall now take up proposals related to indirect taxes. My proposals for customs and central excise aim to further simplify the tariff structure, support domestic manufacturing, promote export competitiveness, and correct inversion in duty. To continue weeding out long continuing customs duty exemptions, I propose to remove certain exemptions on items which are being manufactured in India or where the imports are negligible. Similarly, to further simplify the process of ascertaining the rate of duty applicable on a particular item, I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather, and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover. I also propose to allow duty-free imports of specified inputs, which is currently available for exports of leather or synthetic footwear, to exports of shoe uppers as well. I propose to extend the time period for export of final product from the existing 6 months to 1 year for exporters of leather or textile garments, leather or synthetic footwear, and other leather products. Energy transition and security. I propose to extend the basic customs duty exemption given to capital goods used for manufacturing lithium-ion cells for batteries to those used for manufacturing lithium-ion cells for battery energy storage systems also. I propose to exempt basic customs duty on import of sodium antimonate for use in manufacture of solar glass. Nuclear power. I propose to extend the existing basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035 and expand it for all nuclear plants irrespective of their capacity. Critical minerals. It is proposed to provide basic customs duty exemption to the import of capital goods required for the processing of critical minerals in India. Biogas blended CNG. I propose to exclude the entire value of biogas while calculating the central excise duty payable on biogas blended CNG. Civil and defense aviation. I propose to exempt basic customs duty on components and parts required for the manufacture of civilian training and other aircrafts. It is proposed to exempt basic customs duty on raw materials imported for the manufacture of parts of aircraft to be used in maintenance, repair, or overall requirements by units in the defense sector. Electronics. To deepen value addition in the consumer electronics sector, I propose to exempt basic customs duty on specified parts used in the manufacture of microwave ovens. Special economic zone. To address the concerns arising about utilization of capacity by manufacturing units in the special economic zones due to global trade disruptions, I propose as a special one-time measure to facilitate sales by eligible manufacturing units in SEZs to the domestic tariff area at concessional rates of duty. The quantity of such sales will be limited to a prescribed proportion of their exports. Necessary regulatory changes will be undertaken to operationalize the measures while ensuring level playing field for the units working in the DTA. Ease of living. To rationalize the customs duty structure for goods imported for personal use, I propose to reduce the tariff rate on all dutiable goods imported for personal use from 20% to 10%. To provide relief to patients, particularly those suffering from cancer, I propose to exempt basic customs duty on 17 drugs or medicines. I propose also to add 7 more rare diseases for the purposes of exempting import duties on personal imports of drugs, medicines, and food for special medical purposes used in their treatment. Customs process. India's role and share in the global trade is poised for a major leap in line with our ambition and journey towards Vikasit Bharat. In this regard, I propose many measures for custom processes to have minimal intervention for smoother and faster movement of goods and greater certainty to the trade. Trust-based systems. I propose to enhance duty deferral period for Tier 2 and Tier 3 authorized economic operators, known as AEOs, from 15 days to 30 days. I propose to provide eligible manufacturer importers the same duty deferral facility. This should encourage them to get themselves accredited as a full-fledged Tier 3 AEO in due course. To provide greater certainty and for better business planning, I propose to extend validity period of advance ruling binding on customs from the present 3 years to 5 years. In the spirit of the whole of government approach, government agencies will be encouraged to leverage AEO accreditation for preferential treatment in clearing their cargo. Regular importers with trusted, long-standing supply chains will be recognized in the risk system so that the need for verification of their cargo every time can be minimized. Export cargo using electronic sealing. Export cargo using electronic sealing will be provided through clearance from the factory premises to the ship. For import of goods not needing any compliance, filing of bill of entry by a trusted importer and arrival of goods will automatically notify customs for completing their clearance formalities. This will enable goods to be released immediately on arrival. The customs warehouse framework will be transformed into a warehouse operator-centric system with a self-declarations, electronic tracking, and risk-based audit. These reforms will move away from the current system of officer-dependent approvals and reduce transaction delays and compliance costs. Ease of doing business. Approvals required for cargo clearance from various government agencies will be seamlessly processed through a single and interconnected digital window by the end of the financial year. Processes involved in clearance of food, drugs, plant, and animal and wildlife products, accounting for about 70% of interdicted cargo, will be operationalized on this system by April 2026 itself. For goods not having any compliance requirement, clearance will be done by customs immediately after online registration is completed by the importer, subject to the payment of duty. Customs integrated system will be rolled out in 2 years as a single integrated and scalable platform for all customs processes. Utilization of non-intrusive scanning with advanced imaging and AI technology for risk assessment will be expanded in a phased manner with the objective to scan every container across all the major ports. New export opportunities to support Indian fishermen to fully harness the economic value of marine resources beyond our territorial waters. The following measures will be taken. A. Fish catch by an Indian fishing vessel in exclusive economic zone or on the high seas will be made free of duty. Landing of such fish on foreign port will be treated as export of goods. Safeguards will be put in place to prevent misuse during fish catch, transit, or transshipment. To support aspirations of India's small businesses, artisans, and startups to access global markets through e-commerce, I am pleased to announce complete removal of the current value cap of 10 lakh rupees per consignment on courier exports. In addition, handling of rejected and returned consignments will be improved with effective use of technology for identifying such consignments. I propose to revise provisions governing baggage clearance during international travel to address genuine concerns of passengers. The revised rules will enhance duty-free allowances in line with the present-day travel realities and provide clarity in temporary carriage of goods brought in or taken out. There are honest taxpayers who are willing to settle disputes by paying all their dues, but they get deterred due to negative connotation associated with penalty. They will now be able to close cases by paying an additional amount in lieu of penalty. Honorable Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
One and a half hours.
Item number 3, माननीय वित्त मंत्री जी.
Item number 2, sir.
3.
Sir, with your permission, I rise to lay on the table of the following statements under Section 3, 1 of the Fiscal Responsibility and Budget Management Act of 2003. Medium-term fiscal policy, fiscal policy strategy statement, and macroeconomic framework statement.
Item number 4, माननीय वित्त मंत्री जी.
Sir, with your permission, I move for leave to introduce the Finance Bill 2026.
प्रश्न ये कि विधेयक को पुरस्कृत करने की अनुमति प्रदान की जाए. जो सदस्य इस पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में हाँ वालों के पक्ष में अनुमति प्रदान की जाती है. माननीय मंत्री जी, अब विधेयक पूरे स्थापित करें.
Sir, I introduce the bill.
माननीय सदस्य, आपको सूचित किया जाता है कि माननीय वित्त मंत्री जी के बजट भाषण की कॉपी पब्लिकेशन काउंटर पर ली जाती है. बजट भाषण और बजट से संबंधित दस्तावेज आपके मोबाइल फोन और मेंबर पोर्टल्स पर ही उपलब्ध है. सभा की कार्रवाई कल सोमवार दिनांक 2 फरवरी 2026 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है.
That was the finance minister giving her budget speech. For the markets, it's a big disappointing budget. SCT being increased for futures and options. Of course, we have to go through the fine print of the budget before we are able to give you much more on various sectors, especially housing or any other allocation which has come in. But if I look at the top 10 for now, the capex for FY27 is at 12.2 lakh crores versus 11 lakh crores for FY26. There is a special vehicle which has been looked at, which is the PSU real estate special REITs are expected. So many of the PSUs which are sitting on a lot of real estate asset can now monetize those assets through REITs there. There is a restructuring for PFC and REC which is expected, and it could be in form of a merger or any other structure which will come in. The finance minister has very clearly articulated the debt to GDP framework which she's looking at by 2021, which basically means that debt to GDP would be 50% plus or minus 1 by 2021, and for FY27 it's pegged at 55.6%. It's slightly higher than the street expectation of 55.2% there, but the fiscal deficit is pretty much in line at 4.3% versus 4.4% last year. There is also the 16th Finance Commission recommendation which has been accepted by the Finance Ministry. The centre will be sharing nearly 41% of the tax revenues with the states, which is in line with the 15th Finance Commission numbers there. There's an important thing for the data centers incentive, especially hyperscalers. There's a tax holiday coming up to 2047 for them, for any company which is providing cloud services to the Googles and the Microsofts of the world will be happy with that, as long as it is provided through a data center in India and to the Indian companies there. So that's coming in. Relaxation in buyback. There's a stringent buyback lockdown which was there, which was taking buyback as a deemed dividend, that's been relaxed. Now the taxation will be as per capital gains. There is some taxation rules for promoters who are participating in the buybacks, which has been capped for corporate and non-corporate ones. The SCT, as I said, has been increased by 150% for futures, 50% for option trade, and you're going to see that major impact coming in on many of the capital markets players there, because the revenues are going to see a sharp hit there. And final,
we're talking about capital markets. It's very important to highlight the capital market reaction. Yes, it's a Sunday. Yes, the volumes are low and dried up. But look at the reversal that you've seen in the equity markets. It's a 300-point fall that you're seeing on the Nifty alone. And to think of it, we were going absolutely flat at 11 a.m. into the budget speech. Other than Select Pharma, there is nothing that one can point out. And of course, PFC and a few EMS plays. There's nothing which is in the green right now. While metals, of course, was the weakling from the word go. The disappointment that there was no separate defense allocation coming in. That entire defense rally that we started off so beautifully into the budget has completely unwounded. BEL is now down 5%, and remember, up until 11 a.m. it was one of the top gainers on the Nifty, leading the Nifty up. SBI down 4%. Couple of the technology plays as well are lower. Shriram Finance down 3.5%. Bajaj Auto down 3%. Coal India down nearly 3%. Geo Finance down 2.5%. Tata Steel down 2.5%. Bajaj Finance down 1.5%. Eternal, Titan, Reliance is down 1%. L&T, and remember, L&T, Reliance were going strong into the budget, but completely turned tide. Even Tata Motors passenger vehicle, which reacted very positively to its monthly sales, that stock as well has seen some profit taking, and it's now lying in the red as we speak. Flatten that for HDFC Bank. M&M is down 1% right now. Cipla, ICICI Bank as well, muted. It's only TCS which is barely holding its head above water. Max Healthcare, DRL, Sun Pharma and Kotak, which are the ones which are holding out. But let me take it across to Swaminathan Iyer, consulting editor, ET Now, the one voice we want to hear after every budget and hear his take. Swami sir, your take on the budget.
It is an unremarkable budget. That perhaps you may say is not putting it strongly enough. But there were people who were expecting different kinds of things. Mind you, in terms of the election cycle, the third budget that a government presents out of 5 is usually the one for taking tough decisions, because you don't want to have tough budgets in the last or second last thing. So that there are going to be tough decisions and major changes. This is a very cautious budget with very little major change and thousands of niggling small little changes, which, if you ask me, go against the mantra of simplification. Instead of the simplification, we have a lot of complication. The fiscal deficit is down from 4.4 to 4.3. Just about treading water. Again, very marginal, cautious, not doing anything dramatic. It would appear that there is a discouragement of buybacks of shares. Okay, that will be applicable to some of them. MAT down from 15% to 14%, a small little benefit to some people. But on the big picture, fundamentally, there is very little change in an unremarkable budget. It is one of very cautious continuity. They are continuing, on the big picture, we are continuing with whatever we have. They seem to say, look, we are already doing 7% growth, and there are a large number of headwinds globally. So let us not try anything exciting, and let us slowly and cautiously consolidate and have a budget that does not see any dramatic changes. I am always disappointed. I would say that since this is in the terms of the election cycle, this was a good year in order to do stiff things like steps towards abolishing the fertilizer subsidy, especially on urea. I mean, this is one really big area still crying out for reform, and nobody seems to have the guts to collar this particular one. But let us hope it will come in the future. I would say it's a wasted year, as far as my feelings are concerned, and I suspect the market will have a similar thing. That, you know, in the big picture, we really don't see any change. The big picture remains one of kind of continuity. The difference between a 4.4% fiscal deficit, 4.3, the direction may be right, but the amount that you are actually doing in terms of consolidation, extremely small, not what I would have expected. So I would say that this is a cautious budget, an unremarkable budget, a budget focusing on continuity rather than significant change, lots of complication rather than simplification, and overall you might call it a budget, you could call it a budget from a government that believes that it's doing such a good job that it really does not need to do very much more.
Swami, just to pick up on the point that you're, saying right now, what is leading to so much caution? Or is it more the sort of do nothing to damage it, do more of the same, keep the balance steady?
Yes, and I think there is a case for it. You may say, look, if already we are doing 7% growth, we already have a situation where Mr. Duvari Subbarao and Ananta Nageshwaran, the chief economic advisor, both of them, and this is a point that I have been making in the past too, that for the last 25 years we have been averaging 6.5% GDP growth. There are signs that we may have now lifted to a higher level of 7%. So there's a case for saying, look, if the course we are on is already taking us to such a good level, why rock the boat? If it ain't broke, don't fix it. So there would be a case for saying, let us proceed cautiously. There are a lot of headwinds. When you are doing so well, don't attempt anything dramatic. Let us have more of the same. I understand that, but still I would have liked to see somewhat more aggressive fiscal consolidation, and I definitely would have liked to see some attempt to reduce this one big anomaly that stands out, the one unreformed part, which is the fertilizer subsidy.
Swami sir, I get your point. There are plenty of disappointment, but there have been specific sector pushes which have been given. For example, MSME. For example, biotechnology. There have been these pushes which have been given. How do you evaluate some of the positives that have come out in terms of specific sector SOPs that have been given?
Look, I have always been of the view that while from a point of view of political economy, it is very necessary, finance minister, to be seen giving something to 100 different sectors. But let us not pretend that small little pushes in this 100 little sectors is going to make a very significant or long-term change in their conditions. So 100 crores here, 10,000 crore over 3 years, 10,000 crore over 5 years. These are very modest increases given the scale of our economy. Now, I understand that there is also Mr. Modi who says you shouldn't just be throwing money around. He's against freebies. So to that extent, we can say a good thing is that the budget doesn't have any freebies. It has a large number of small attempts, this is there for marine, this is there for leather, this is a little there for textiles, we are going to do this for data sector, attract more investors. So there are small little things for a large number of different sectors, but nothing I would say that will dramatically push any one sector. Data centers are already coming in such a big way that giving that tax holiday, I do not think will make it that much more, because that is one area where I think we have STEM graduates and we have the ability to handle data centers for international use. So, okay, you have done this little push, as they say. Every finance minister says, in my budget, no sector will be left behind. I will give something to every sector. To that extent, yes, this budget too, something has been given to it. But in terms of the bold, big picture, I would not say the sectoral allocations have changed very much. You could also say there is no reason for them to increase very much. We go back to the thesis of don't rock the boat. If already you are more or less doing what is to be done, any changes, either you need to have something dramatic like you do on the fertilizer front, but on the other side, I mean, modest amounts supporting different sectors, this is the job of government and it will go. But I would say that the while some little sectors will gain niggling little advantages here and there, we also have a situation where we are moving away from simplification to complication because there are so many separate little changes for each sector and within each sector. And I would have liked to see more simplification rather than the complication.
But the one very decisive mandate is clearly for the options traders, Swami sir, the very steep increase in STT, and this in addition to the hike last year. It's a very, very clear signal to futures and options and trading activity for all arbitragers out there. And equity markets, mind you, are not liking it at all.
Not surprised. But you know, there is the notion, I mean, there is still, I think, in India considerable worries about whether our futures and options would be encouraging unhealthy kinds of leverage. They do encourage leverage of a very large amount. And they say that to the extent that I do not think the market will collapse merely because you have increased STT. But yes, the government is sending out a signal that this is not a sector where we are very happy about increasing activity. The government would rather have it on just futures and bonds rather than get onto options and futures. That is, I think, is very clear. And I have no objection to it at this point. The trading volumes there are so relatively small by international standards. That manipulation that people worry about is possible from time to time. So the future of the markets, as I said, the government is more or less saying, let us not emphasize futures and options, let us just emphasize the bonds and the equities. And to the extent that there are some people who see the linkages very clearly, if that kind of leverage to invest in stock markets goes, in effect, that's what the government is doing. Say, reduce the leverage. The stock markets will be disappointed and they will have to absorb that particular message.
Swami sir, thank you so much for giving us that quick first take with regard to the budget. We will leave this conversation here. Thank you so much for that. All right. Let me also introduce the larger think tank panel who've just joined us. We have with us Rohinton Sidhwa from Deloitte, Radhika Gupta, who is our budget editor, Mr. Dinesh Kumar Khara, who is former chairman of SBI. We also have with us George Joseph of ASK and Abhishek Parikh of Wari. All of them joining us. Let me start off with your first take, Mr. Khara, with regard to the budget. How are you viewing this? PSU banks, sir, are one of the bigger losers of the day. I'm not sure what the expectation was, but there may have been some expectation built in. I'll take the direct question first and thereafter the 30,000 feet as to what you felt about the budget.
I think perhaps the expectation was some kind of a rationalization as far as the tax on the deposit interest was concerned. Maybe that is one of the possible reasons for this kind of a reaction by the market. Well, of course, the second question, which is in terms of how I read the budget, very clearly the focus is in terms of SME, employment generation, agricultural sector, infrastructure, how can we strengthen the infrastructure, and also the shipbuilding is actually becoming ship repair, shipbuilding, and also internal waterways. That is something which is a new initiative, which I believe it has been strengthened quite a lot, which was there for quite some time. But the way it has been brought out now in this budget, the clear focus, that is, I would say, a significant step up. And I think in the SME space also, when it comes to threats, etc., when it comes to creating a committee for actually revisiting the public sector banks and how can they be revitalized in terms of technology as well as in terms of the size and scale, which is one of the expectations of the government also, that we should have the banks of international scale. That is something, these are some of the positives which I would say, which is very clearly evident from this budget.
Radhika, your take and market reaction, Radhika. It's been a tough day already.
It has been a tough day. I would divide the budget outcome into two parts. I think one part is as expected. So capex push very good, maybe a little bit of missing color on defense. Fiscal deficit, you could debate 4.2, 4.3. I think the push in new sectors on manufacturing was very, very good. And I think the push on employment and creative ways to think about employment in different sectors, whether it's medical, whether it's content creation, whether it's handloom, I think all of that is very good. I think the thing that is the other side and came out as a surprise is STT on FNO. I know you're all smiling. Of course, the government has been very clear about discouraging FNO participation, but I think it's worth hearing the larger impact on futures and options market liquidity, because it does become very expensive even for institutions, and we are one of them, to participate in FNO and FNO strategies. So I think that's going to have to be played out, and you're seeing how capital market stocks are reacting. So one part exactly as expected, one part a little bit of a surprise.
George, markets obviously are not happy, but that's the first reaction. But in the larger scheme of things, considering that the already existing hike was hiked upon now this budget, it's going to lead to drying up of volumes. And like Radhika was pointing out, this will, further perhaps strain capital flows.
The volumes have been drying for the last 1.5 months. If you see, the cash volumes already have been drying up. But, when I look at from this budget perspective, it is very clear that, the gross market borrowing is going to be higher, and which is going to put pressure on the bond yields. And also, if you see it is not very good for the, NBFC or other sectors, especially rate-sensitive sectors. And when you look at from the clear expectation basis, there was a big expectation on the boost in defense and, other infrastructure projects. In some shape or form, job creation was a focus in this budget, in my view. Orange economy and on so and so forth. The biotechnology, rare earth, some of the areas which it has to be focused on has been focused in the budget. But given the stance of the external environment, probably this budget has done its show and maybe missed in few sections which we all were expecting.
Rohington, the fine print in taxation, there's been so many changes this time around, which is very unlike the last few years or the kind of reputation we've come to get of this government. What's the sense like? A lot of small tweaks and twists. Give us the top 2-3 which you've been able to go through.
Sure. So the big one that I see is, and possibly may have an impact on corporates, is this phasing out of the MAT credit. As you know, under the old regime, if you paid tax under the MAT regime, you automatically got a carry forward credit which you could offset when you paid tax under the normal regime. Now, as we transition to the new regime where there are lesser, tax holidays, etc., there's obviously a need to also figure out a way of transitioning how the old MAT credit will continue going forward. And it seems there's a path which has now been laid down where potentially corporates will have to devalue the amount of MAT credit that they carry forward going this. And the exact amount, etc., we'll get to know once we look at the fine print. The other thing that pleasantly surprised me was, and I had said earlier that, we would expect the government to end up between 25 to 27 lakh crores of net tax collections. They actually called out 26.5, which is at the higher end of the spectrum, which, it's a pleasant surprise. It seems that they are looking at collecting more. The downside I see there is they're probably holding back on some refunds, which is leading them to that higher net tax collection figure. The last one that I'd like to talk about is around the safe harbor regime, which is rolled out. And this has been a kind of a thorn in the side of a lot of multinationals who operate GIC centers. The main issue they've always faced is very aggressive transfer pricing adjustments being made against their tax filings in India. And by selecting 15.5, which most people would agree would be a somewhat reasonable rate to go with, I would see a lot of the noise going out from those transfer pricing adjustments. So there's also a commitment to reduce the amount of open unilateral APAs. Up until now, we always had more APAs outstanding than being cleared. With this, it probably will correct the balance.
Okay, let me talk to one of the sector beneficiaries. I'm, of course, going to come to Abhishek Parikh in just a second, but we have with us Mr. Shrihas Tambe, the MD and CEO at Biocon Biologics, joining on the show. Mr. Tambe, thank you for joining us, and apologies to keep you waiting. But Mr. Tambe, let me try and understand, how is it that you at Biocon Biologics plan to leverage on the Biopharma Shakti program, this 10,000 crore rupees initiative which has been announced? How do you plan to access this kind of funding to try and accelerate your own domestic manufacturing?
Yeah, I've been listening to the panel quite intently, and thank you for having me on your show. Clearly, there are mixed reactions to the budget. It's hard for making sure that everyone is happy with what's been provided for. But for the biopharma industry, clearly there are lots of positives, I would say, that we can take away. Coming on the back of the RDI announcements of 1 lakh crore that were made just before the budget, the Project Shakti comes in as a shot in the arm, I would say. It is a very thoughtful program. Even the acronym is very thought out in terms of how Shakti is spelled out, which is biopharma strategy for healthcare through knowledge, technology, and innovation. So there's a lot of thought that's gone in even in putting the acronym together. Apart from the fact that the government's acknowledgement that the communicable diseases are of the past and non-communicable diseases like oncology, diabetes, diseases are what are here to stay, which is what we've been saying. And it's good to see that the three main things that the government is focused on, or the budget particularly is focused on, is one, through the RDI grant on innovation, two, building global scale. There could be a modest layout to begin with, but there is focus on building global scale. And then to look at how regulatory structures can be tightened so we can come up to speed with global expectations. So all in all, I would say balanced at a broad level, and very positive for the biopharma industry, with the acknowledgement of biologics and biosimilars as the new standard of care.
Okay. What does this do for you in particular, Mr. Tambe? Give us a sense of that. What's the opportunity size like for you, and what will you do differently going forward?
Well, we've been saying for a very long time that if India wants to be successful, and we've been very successful in the generic space as a country, being called as the pharmacy of the world, standard of care has shifted to biologics and biosimilars over the last couple of decades. And to view this opportunity, there is over $270 billion of patented drugs that are losing exclusivity. But you can't really partake in that opportunity if you do not have the impetus to fuel innovation and to build global scale to address it. And what the budget has aspired to do is to create that capability. Specifically for Biocon, we see this as a validation of what we've been saying, and we believe that it will build global scale companies out of India, playing to that Atmanirbhar Bharat narrative, but more importantly, a Viksit Bharat narrative.
All right. Thank you so much, Mr. Tambe, for coming in and speaking with us. This is, of course, plenty of moving parts within the budget, but this is part of, that part of the budget which is a very small thrust with regard to pharma. Now, let me switch focus, though. Amitabh Chaudhary from ASSOCHAM joining us live at this hour. Amitabh, great having you here. This is Harsh. Let me first start off, Amitabh, by trying to get your sense on what you made of the budget, because it's a bit of a mixed bag of sorts, if I can call it that. But your take right off the bat.
Well, I think the expectations of the budget to start with were low. Already some of the big reforms had been executed by the government, and to expect another set of reforms or big bang announcements would have been a bit unfair. So in that sense, the fact that they have maintained fiscal prudence, the fact that they've continued in the direction of ensuring that there is stability in policies, is a very, very important statement, I think, in the budget. Obviously, they have given clear, signals on which are some of the thrust areas government has in mind. We were just, discussing with one of the, CEOs about what they're doing in the pharma side. We also have similar announcements which have been done across, various sectors, including semiconductor, container manufacturing. They've championed MSME schemes, dedicated freight corridors, railway corridors, focus on infra in the tier 2 and tier 3 cities. They've talked about boost to corporate bonds and also about how they can help the municipalities to issue bonds and so on and so forth. So the whole focus seems to be kept Atmanirbharta as the lodestar of the budget and a lot of the announcements which have happened. We obviously need to read the maths. The market is spooked a little bit because of the higher borrowings. Market is spooked because they have increased the STT rates. There were people who were expecting some concessions for the foreign investors in terms of capital gains taxes. That has not come through. So market is obviously reacting to the headline announcements. I think when they go through the details, we'll realize that we need to get back to business. There are a lot of positives also in the budget. While people are seeing the negatives, hopefully they'll start seeing some of the positives and the market will settle. So as you rightly said, it looks like a mixed bag right now, but end of the day, we expected no big announcements in the budget to start with. So it is exactly what we expected it to be.
Right. But Amitabh, the budget has proposed a high-level committee on banking as well to try and align the sector with India's next growth phase. As a leader who's always advocated, and correct me if I'm wrong here, for the creation of 10 mega banks in India, tell me what specific regulatory risks or fiscal unlocks do we need at this juncture to try and get to that aim?
Well, the government has talked about setting up a committee, so let's see the composition of the committee and ultimately what the scope of that committee would be. So it'll be very unfair to kind of react to it straight away. But the fact that government believes that something of this nature is required is itself a positive step. And they have talked about financial inclusion and customer protection also as one of the two pillars of that committee, apart from obviously future of banking. My view is that the nature of banking industry is changing, apart from all the technology coming in, the kind of deposits which the banks are getting, where are the deposits coming from, all that has undergone a kind of a meaningful change over the last couple of years. And it will be important for government and RBI to step back and look at what are the new generational reforms and the changes that can be brought in. This could also have some stuff around, FDI. Can we invite, global banks to come in? But yes, if India wants to be and will be one of the largest economies in the world, India does need very, very large banks. And so whatever that can be done to kind of push that agenda is always will be welcome. And that's what the government has done in this budget.
Amitabh, how do you see some of the policy measures with respect to financial services? Because she's been talking about restructuring of two major public sector NBFCs, which is PFC and REC. Do you see the government going ahead and doing further restructuring for public sector banks as well?
I think government has talked about it. It's not that she had to make a specific announcement in the budget. The government has hinted that they would like the banks to become bigger so that they can be more meaningful in the marketplace. And I think that process will continue. They do not need a reinforcement or reiteration in this budget itself. They've also talked about restructuring some of the government NBFCs. They want to create larger NBFCs. Again, it's exactly along the lines of what the government has talked of as far as the banks are concerned, because they believe the bigger institutions can not only take the right kind of risk because they have a much larger size, but they can play a much bigger role because the requirements for the economy are much bigger now, and small NBFCs or small entities cannot play that role anymore. So you do need people or institutions with much larger balance sheets to be able to have that impact and difference which is needed for the economy of our size and the projections we have and the aspirations we have for this economy. So it is a step in the right direction. I think government is, the finance minister has used the budget as a clear signal to that what the government intends to do. And as I said, it's a continued thrust in the right direction to continue to grow the size of institutions so that they can have a bigger impact in terms of what the market exactly needs. Let's also use this opportunity to say that the fiscal assumptions, like some of the previous years, look reasonable and credible. And by the way, there is some flexibility available in terms of what comes in the form of RBI dividend. So I would say that the government has stuck to those certain basic rules of what they're doing in each of these budgets. So the credibility improves directionally. It is giving a clear signal. Obviously, there are some statements have been made about consolidation of the sector, clear signals about how they want to push certain markets, and at the same time, they've also given clear signals in some of the areas where they want to extract a little bit more of tax and revenue.
6% growth.
But Amitabh, I know we've got you to talk about the budget, but I'm going to take the liberty and definitely ask you. We've got a very somber equity market reaction to the budget. Perhaps Axis Bank can lift spirits. How soon do we get to the 1.8% ROA mark for Axis?
Oh God, this is not the right forum to talk about it, but I mean, that's an aspiration we have. It's not that we give up that aspiration because, one quarter went well or one quarter did not go well. As a management team, as an institution, our aim is to get to 1.8 ROA, and that aspiration does not change. Obviously, the macroeconomic situation changes, the geopolitical situation changes, but we have to keep executing on our aspiration. And I'm very confident that as we keep plugging away, we will get there over a period of time. I don't want to start projecting which quarter, which year we'll get there.
So next fiscal?
We will keep trying. Thank you.
Okay, we'll leave it at that. We'll let you go. Thanks as always for joining in. Thanks for your time. I'm just going to revisit what the equity market reaction is because, call it what you may, Sunday, low volumes, etc. And perhaps the litmus test is only going to be tomorrow. We were down almost 300 points on the Nifty futures alone, 25,189. It's not just about Hindalco, which was already under pressure from the word go. BEL, SBI, Nestle, ITC, Bajaj Finance, and most of these names actually went strong into the budget speech. ICICI Bank down about almost 0.5%. Reliance is completely turned. L&T is down about almost 0.5%. And look at the breadth of the market. That's where the sharper pain has come in. In fact, if we can just extend the graph, the kind of volatility that you've had today in the advanced decline ratio has been quite something. Hindustan Zinc is now down 10%, MCX down 10%, Nalco down 8.5%, Muthoot Finance down 7%. I was talking about the move in BEL. Look at a BDL, that's also down about almost 7% as we speak right now. So the disappointing quantum in the market is much higher than the few odd gainers like a Paytm, Amber, Swiggy, Crompton, or for that matter, even Max Healthcare. But Sajid, you had a clarification and calculation on defense, right? Perhaps that could cheer up some of these defense names.
If you look at some of the numbers, fine print numbers, the defense allocation for capex has gone up by nearly 17 to 18% to 2.19 lakh crores. Now, last year it was around 1.8 lakh crores. So that's a good thing which is coming in. The market was expecting between 15 to 20%, and that's what it is. But what is disappointing is the GST growth which is coming in at 6.4% at 10.19 lakh crores, and that's a central portion of the GST. I'm not sure how that's going to be there, because that means that there will be more borrowings which will come in. And Mr. Khara, more borrowing means the onus is now on PSU banks to soak up all the government bonds.
Because they are normally the largest subscribers when it comes to the government bonds. That is, but we'll have to wait and watch how really it works out, because otherwise the SLRs have been reduced in the past. So that is the reason why perhaps the stock would have come down. But nevertheless, when it comes to the depreciation of the existing stock also, which will be a function of if at all yields will go up, then it will have an impact on their profitability as well.
But Mr. Khara, extension to that question, when I was looking at the consensus estimates with regard to the gross borrowing number, as was being pointed out by George as well, the number was in around the 16.5 lakh crore number. It's coming above the 17 lakh crore mark.
That's true.
Does this bode negatively even for our NBFCs? Because what this will mean is that you will have to likely raise money at slightly higher rates, very likely, if it pressures the 10-year bond yield.
No, actually speaking, when it comes to the interest rate structure, so the government bonds actually decides the floor.
Correct.
So from that point of view, this is one of the factors, one of the very important factors. But how will it really pan out will depend upon the demand and supply both. So I think, and if at all it is staggered over the period of time, then perhaps for a good part of the year, it may not really impact. So I think borrowing program, in terms of calendar will also make a difference.
Sure, yes. but it will impact. That would
on the
typically
face of
be
it,
the
yes,
case.
it will actually, when it comes to the issue relating to interest rate structure, it will certainly have an impact.
Yeah, that makes a lot of sense. Radhika, your take with regard to the defense spend, because that was the big number which the street was already penciling in at the start of this week. We saw that very good rally in defense, 7% plus all through this week in terms of the Nifty India Defense Index, very strong rally. A material negative you would call this or not really?
I think not a material negative, but expectations were high and there was no positive call out. There was a lot of positive call out for policies around manufacturing, for instance. But if I look at the number of times defense was mentioned in the speech, it really was very, very bleak. And, I just looked at the number that Sajid gave me. So I think a muted reaction after over expectations. I just add one thing. There were some positive announcements on the corporate bond market that have been missed in this that I think are very meaningful. I think the whole idea of creating this municipal bond, total return swaps, corporate bond market making, at least they've recognized that liquidity in corporate bond market is a problem, and they need to do something to address it. So I would just add to Mr. Khara's point, there's a lot of market borrowing. We need to find demand, but at least there's an acknowledgement of doing something to the corporate bond market.
Mr. Khara, such a pleasure having you on the show today. Thank you for your time. George, we'll let you go as well. Thanks for joining in. Let me now welcome on board Dr. Anish Shah, Group CEO and MD at Mahindra Group, joining in for his first reaction on the budget. Mr. Shah, great to have you on ET Now. Thank you for your time. What did you make of the budget while we're still scratching with the nitty-gritties and the finer print?
Look at the medium to longer term, because that's important for India. And in that context, this is really an excellent budget. It does a lot to sustain the economic growth momentum that we've got, and recognize that with the world around us being so crazy, we've still been able to maintain that momentum. A number of reforms that have taken place in the past few years have helped that. And what we see here is further building blocks, a continued focus on capital expenditure. And that comes after multiple budgets that have focused on capex, and that will continue to help building the foundation for India. A continued focus on infrastructure build, bringing in SMEs to be part of the growth story, which is essential. And all of that's going to make India more competitive from a manufacturing standpoint and be able to make in India for the world. This budget also focuses on Atmanirbharta. The rare earth corridor is something that's very welcome and much needed. And most importantly, on inclusion, as it looks at a wider participation in the benefits of economic growth across small and marginal farmers, across women, and then the capacity building for youth. I think all of these things augur very well for India, and therefore we would look at it as truly an excellent budget.
Mr. Shah, defense capital outlay has been increased to 2.19 lakh crores. That's nearly 17-18% jump in defense outlay. Do you think that's a good signal that the government is giving, especially for defense manufacturers, and you are also involved in defense manufacturing?
Yes, so we focus on security and transportation solutions, and that definitely is a good signal. But it is essential for India right now, as just the various geopolitical issues we see around the world. It is more a required step at this point.
Okay, Dr. Shah, a very last quick question with regard to India-EU FTA. Is how much of a material negative is it from an India auto OEM standpoint, given the fact that we are opening the Indian market up for European automakers to come in and sell here? So give us that perspective.
We don't see it as a negative at all from an India FTA, India auto standpoint, because there is no single model that will be brought in at a lower price than it is sold in India today. And we see a lot more opportunity in terms of India being able to export to Europe. The important part here is that the government has managed a very fine balance to be able to continue to encourage European makers to set up plants in India. That is what is essential for Make in India. And that balance has been done very nicely. And therefore, we see this as a very positive FTA.
Okay, Mr. Shah, great to have you today on ET Now. Thank you so much, as always, for your time. And we've got Sunil Singhania. You've always seen him on ET Now right after budget. Sunil, hi, afternoon. Sorry to keep you waiting, but you know how the budget drill is, as always. Sunil, what has disappointed the equity markets? Low volume day. Yes, it's a Sunday, but a 300-point fall in the Nifty alone.
Obviously, on the face of it, there is disappointment for capital markets. But, as we go through the fine prints, I think the outlay for railways, defense, infra seems to have increased. And I think that is one reason why the markets have bounced back. I think the only one thing which is a little disappointing, this tweaking of STT rates, capital gains tax rate every year, I think that unnecessarily causes irritants, and yes, it makes sense to discourage people to speculate, but we have to just put our thoughts together and say, this is what we are going to do, and now this is going to sustain for the next 3-4 years. Obviously, the buyback tax has come as a little bit of a positive, but I think if I've always said that if we have to go from 4 to 8 trillion, $10 trillion, particularly in a scenario where the world is so volatile, there are so many headwinds, multiple wars, this tariff thing hanging on it. I think we need a very, very conscious push. And I think to that extent, the market might seem to be disappointing, but, earnings will go on, stocks will go on. Let us see.
No, absolutely, Sunil. Life goes on, and we've seen that more than enough times in the market. But talk to us about the opportunity it holds today. This kind of dip that we've seen today in the market. Is it an opportunity, you reckon, just the volatility?
And I think if you are positive on India from a 3-5 years perspective, then every day is an opportunity. Just because the stocks have fallen 1-2%, the markets have fallen 1-2% today, does not make it more attractive or less attractive. I would say that read through the fine prints, see your asset allocation, see if you've already got equity exposure, stick to it. Don't jump in just because some stocks have fallen 2-5%. But I think it's very difficult to analyze everything in a matter of minutes and say, because of this, you have to do that.
The problem with equity market participants is that whatever's said and done, they're like, doesn't matter, put it behind us. India is a great story, right, Radhika? It is, yes, it does work out.
Indian equity markets and, capital markets have survived LTCG going from 0 to 10, 10 to 12, X, Y, Z, and every time you write COVID, every time you write an obituary of equity markets, the volume seems to come back stronger. So I think what we have to have conviction on is financialization, participation, and the fact that more people will benefit from wealth creation and come forward. So they're optimistic, but there's reason to be.
Yeah, absolutely. But right now, as we see it, Sunil, the fact that you've had those $22 billion worth of outflows, has the budget done enough to get those FPI, FII flows back into equity markets? We need that right now. Of course, part of the reason is relative global strength in other markets, the rupee weakness, all of that coupled into. But can those flows after this budget find their way back? Or are they just waiting for the India-US trade deal?
No, Aisha, I was just adding to what Radhika said that, 10 to 12, 0 to 10 and all. But there's always a last straw on the camel's back. I think we can't bear more burden as far as capital markets are concerned. It is very, very clear. We can say all the good things on TV, but we have to be realistic. And, to say that capital markets are not very important for taking the economy to 4 to 8 to 10 trillion, I don't think that will be right. I think we have grown so much. We have seen the emergence of private sector. We have seen the emergence of so many sectors and companies who are investing billions and billions of dollars, all because the support of capital markets, be it equity as well as fixed income. And I think that is what has to be appreciated. And, it's okay to make money at some point of time, You just can't say that this participants are making more money, so tax them more. So I think whatever has been done so far, yes, we accept it. But I think going forward, I think there has to be, as I said, you announce that for the next 3 years, we will not tweak anything. And I think then life can be more predictable.
Sunil.
The pain, Sunil. We can hear it.
If I can take a question to you, Sunil, since you asked about bond markets, I'll take the liberty to ask a question. I think banking has been a part of financial services that hasn't done well. I think the FM outlined how banks are in good shape. You've seen large market borrowings. How do you see banking going forward post this budget?
And I think banking as a sector has come, like I would say, much ahead. NPAs are in control. I think the systems, processes, efficiency has gone up tremendously. Even if you see PSU banks, most of them have net NPAs of 0.5% or lower, which is like music to the ears. So, and I would say a lot of credit goes to the government because they've not interfered in the working of the banks as was the case earlier. And going forward, it's very clear that yes, we need a very or more vibrant bond market, but we will reach there. The only thing I'm trying to highlight is that if participants are clear about the taxation from a 3-5 years perspective, then the planning becomes all that more easier. This wild swings, whether it's the bond market or particularly the equity markets, don't infuse confidence. And particularly in a year where Aisha mentioned that, $20-25 billion has gone out by way of foreign outflows, I think you need a little bit more effort to ensure that, one, they stop this. And second is, how do you bring them back? Because ultimately, if foreign flows comes, rupee will be stable. I'm very sure this yield, which has gone down to 6.7%, will inch back to 6.3, 6.4%. And it would help all the constituents, including the bond markets, the banks, and the capital formation, which is the need of the hour for us to take the economy to $8 to $10 trillion.
Absolutely. Sunil, stay with us. Perhaps we've got someone joining in who shares the same thoughts. Sandeep Sikka, ED and CEO at Nippon Life India Asset Management as well. Sandeep, hi, afternoon. Good to be speaking with you. Share the same pain as Sunil. There is only that much that you can take, and you need at least clarity on, what kind of thought process the government has on taxation when it comes to capital markets and F&O in particular.
Sure, I think I share, the one point that Sunil mentioned, it's, in the first few minutes, it's very difficult to give a reaction. But let me see some positives in the budget, I think from our point of view, you should see basically the government continues the fiscal discipline that they started over the years, and whether the fiscal deficit also coming to 4.3%, that's a big positive. And also, I think never before we have seen a budget, which has gone so micro, going into micro details, whether to create a semiconductor fund of 40,000 crores, SME fund of 10,000 crores, medical tourism. So all these things are going to be very, very good from a long-term point of view. But short-term, when we look at, from immediate reaction from a market, these things are not captured. Coming to STT, definitely this has come as a surprise, I think, and too much of swing, change in taxation is never a good thing. But again, I'm sure there would be a thought process which we may not be able to analyze at this point of time, and could be trying to make a lot of these traders into long-term investors. That's the only positive I can see in this. Will it happen or not happen? Time will tell. But overall, I do not see the budget as negative as the market is seeing, because it has a lot of positives which will help India in long run.
Sunil, let me come back to you. From the budget, any structural themes that you're seeing in terms of a change? For example, the PLI scheme from 22,500 crore has been hiked in terms of the allocation to 40,000 crore. Material positive, you reckon? And is this a potential opportunity for early investors to jump on the bandwagon, if I can call it that?
One is, we continue to be extremely positive from a longer term perspective, and Aisha can make fun of it for the for the near term, but it's a fact. The other thing is, one thing where there has been consistency from the government, over the last few years has been this whole focus on Atmanirbharta, manufacturing in India, and I think it continues. The sectors obviously keeps on getting added. So this time we have data center, and in fact, it's a big thing, because if you give tax holiday, technically all the data centers in the world will be more than happy to look at India from setting up a base as far as data center is concerned. And same is the case with infrastructure. I think the railways output, the outlay, the infra outlay, it's very clear the defense outlay has been increased. And I think all these are consistent in the sense that government wants to encourage Atmanirbharta, whether it's through PLI scheme or increased outlay in terms of support and so on and so forth. So I think that continues to be a big thing. In fact, we have all forgotten the China plus one, which was very big because of all this tariff thing. I think once this tariff issue is solved, and hopefully it should be done sooner than later. We already have the EU large mother of all FTAs already been formed up. And I think this, the manufacturing bit and Atmanirbharta is something where we can see consistency and a lot of legs as we move ahead.
Well, Sunil, I was sympathizing with you because I do understand that, of course, this is going to impact volumes.
We need all the sympathy at this point of time, Aisha. We need all the sympathy.
But I do want to ask you right now, Sunil, what sectors, if at all, does the budget throw up in terms of long-term opportunities?
No, I don't think this budget is changing our view. I think we continue to be positive, what we have always been. So financials, financialization of savings, manufacturing, particularly the engineering bit, the pharma bit, I think the sectors continue to be the same. I don't think the budget has changed anything as far as view is concerned.
Sandeep, if I were to ask you about 3 or 4 themes that stood out for you in this budget, especially from a long-term point of view and from an equity investment point of view, which would be those themes? Sandeep? Sandeep, you can hear me. 3 or 4 themes that investors can invest through this budget. Which are those themes?
Yeah, I think from the investors' point of view, especially from a mutual fund industry point of view, I don't think so there are any themes which have new themes that have emerged out of it. But I think the overall, I think we, like I mentioned earlier, we remain positive, I think, from a long-term point of view. I think for the investors, I think one thing is very clear. I think that one of the speakers mentioned earlier today also, that I think this fall in the market, should somebody jump into it because the market has fallen, answer is I think you need to systematically keep investing. I mean, you should not be trying to see the markets have fallen or any particular theme. But not for the investors, but as a country, one of the themes that has come out has been basically specifically 2 things which stand out in this budget. A has been the semiconductor thing that I talked earlier, and also basically the data centers, the long-term tax holiday that has been given. I mean, these are very, very big positives. I think you'll see a lot more foreign investments coming into India, and also I think we're working towards India being Atmanirbhar Bharat. So I think overall the story does not change. I think we remain equally positive on the India story. For the investors, rather our advice will be not to get carried away with the short-term correction, keep human biases away, and I think keep seeing it from a long-term point of view. And we have seen these kind of corrections and reactions enough in past.
Okay, Sandeep, we'll let you go on that note. Thanks for your time. Sunil, if I could just come to you for a last question, since it's going to be... Okay, we'll get to him in just a second from now. But that's pretty much it. Just want to revisit what the market as well is holding up at. While we were, sitting on a 300-point decline, things have only just very minuscule changed from there. Wipro has put on more weight. It's up about 3.6% as we speak. Titan has actually jumped up. In fact, we should bring up the intraday graph. I don't know whether the fine print entailed anything for Titan or not, but it's a massive 3.2% spike that you're seeing on Titan right now. There you go, holding up very smartly. Max Healthcare, TCS, Infosys, these are names which are holding out quite okay. HDFC Bank, status quo, M&M flat right now. L&T down about almost 0.5%. Kotak, Eternal, ICICI Bank, they continue to be lower as we speak right now. And then, of course, the entire metals, that PSU bank trade, that continues to look very, very challenged for us.
Well, yes, the EMS basket also will be in focus. We have Ramesh Kunhikanan, who is the Executive Vice Chairman at Kaynes Technologies, joining us. Ramesh, the PLI scheme itself, we've seen a huge increase in terms of the allocation, but I also understand that it is very, very sector-centric. For example, mobile phones in terms of PLI was at 9,000 crore in terms of allocations last year. This time around, it's 1,500 crore. What's the fine print reflecting for your products, which is auto as well as some of the other products you do? Because you clearly don't do phones. So give us the sense on how you're reading the fine print.
As far as Keynes is concerned, we are happy about this budget because semiconductor ISM2 is coming out and it is focusing on the entire ecosystem. So that will help India to put in the global map for the semiconductor manufacturing. As far as ECS is concerned, we have components sector, we have PCB. All these sectors are focusing on PLI and we are very happy about it.
Okay. How large is the allocation, sir?
See, specific allocations have not yet come for ECS, but I'm sure and certain they have taken it to 40,000 crores. So that itself shows that there will be a large portion.
Got it. And with regard to the budget as a whole, any misses from your end that you felt were material, which you were expecting and didn't come through?
No. As far as we are concerned, the entire industry's requirements have been met by giving us a complete ecosystem and big thing for IT services company?
So it basically impacts foreign IT companies who provide services to their principals back outside India. And essentially over there, what happens is the government tax department would always go and say that they were subject to a much higher profit margin than what they declared in India. But with the safe harbor coming in, now that's being capped. And that's an overall good development. In fact, there was a lot of noise about the number of advanced pricing agreements which had to be put in place in order to counter the strategy of the tax department trying to increase the markup for these services. So overall, I think it would be a good development for them.
Is this a precursor to the India-US trade? Because you're done investment incentives or tax holiday for cloud services providing company, hyperscalers, provided they do it through Indian data centers. Now you have this GCC, which is again for many of the foreign financial services, financials basically who can come and set up GCCs in India. Is that one of the irritants which was there as part of the trade negotiations and now getting ironed out in this budget?
So I'll add one more to that list. Actually, even the electronic manufacturers who actually were bringing in a lot of equipment and, foreign companies who were manufacturing, semiconductor supply chains in India, they were actually bringing a lot of equipment, and that also created a taxable presence for those foreign companies in India. So, I mean, those are all the irritants which were there with a lot of American companies. So, yes. It's being slowly addressed, so I think it's a positive step.
How quickly do you expect these safe harbor rules to be notified? Because till they are not notified, how do you execute, right?
Normally, the budget proposals come into effect immediately on the 1st of April.
Yes.
So hopefully this would be coming into effect from the 1st of April itself.
And Rohinton, how are you looking at buyback? Because that's the other big change that's playing out. I have to pose that question to you. It's a mandatory one. So how are you looking at that?
I mean, buyback has been this flip-flop exercise, I would say.
Correct.
Started off by saying it's capital gains. And then there was a lot of planning done by a lot of companies because it was capital gains. You had foreign companies planning using treaty benefits. Then they brought in the buyback tax. Then they removed the buyback tax and treated it as a dividend. And now they're again flip-flopping over and say, no, for shareholders, it's going to be capital gains. But for promoters, it'll continue as a dividend. So I mean, it's a huge flip-flop, and I don't think the government should change tax policy so frequently on such a critical issue, in such a manner. So I would say that there has to be, and this is the talk about certainty which always comes about, that as soon as you have planning which you have done for an investment, typically investment cycles are at least 5 years, and you have the law changing on you year to year like this, it really changes the economics of your business.
Yeah, and it does. And IT sector will be one of those sectors which will be deeply impacted by this. Radhika, your take?
And IT sector is a sector that has just gone through its worst, right? I mean,
Yes.
it's struggled with everything that's happened with AI. It's now, in my view, starting to come out of this. It benefits a little bit from the rupee. So this doesn't help. In general, I think change in tax policy, as much as we want cuts, is not good. By the way, Rohinton, on a better note, at least they didn't tinker with personal income tax and capital gains after having a stable regime for the last few years.
They reduced the TCS on education and other stuff,
but
which is
small. I mean, the fundamental structure of capital gains after removing indexation, etc., has been left unchanged. So I think even from a global investor policy, India needs more tax consistency. They didn't do anything on withholding tax.
Rohinton, anything on this foreign outflows? Is there any policy which has come to help foreigners retain their money in India, or in some way?
So the way I'm seeing it is there was a innocuous announcement by the finance minister about her looking at revamping or revisiting FEMA.
Yes.
Now, FEMA has been something which has been evolving over a period of time. As you know, we have significant control still on capital. Most of current account transactions are on automatic basis, but we still have significant capital account transactions under control. And because of that, I would say that one would have to wait to watch to see what she has planned out there, because that also is a major irritant. There are a lot of situations where companies who are in regular operation, foreign companies or regular operation, bringing in money from abroad and then by mistake have to change their invoice, have to take it back. There are major irritants in procedural issues with regard to that. And simplifying some of that can really help.
Sorry, quick clarification. So 22% is the tax rate on buyback now, treated as capital gains, but that's only for corporate promoters.
Oh, yeah, no. So the way it works is that in October 2024, the government changed the rules and abolished the buyback tax completely and brought in a tax where, it was treated like a deemed dividend essentially. So effectively, what that meant is whatever income you earned was treated based on your tax bracket. So whichever tax bracket you were. So say you were in the topmost tax bracket, you would be taxed at the topmost rate. What they are now doing is for shareholders who are not promoters, they are saying that we'll treat it as capital gains once again, which means you get the benefit of the 12.5% or the 20%, etc. rates that are applicable for capital gains.
That's the thing, right, Radhika? Nothing has been done for those flows to come back.
Nothing. I mean, I think withholding tax was the big one. The announcements have been marginal. I think there's one more that I just see on your screen flashing, which is GIFT. I think they've been trying to develop GIFT in a very meaningful way. So the tax holiday that we have as asset managers and GIFT has been doubled. There's been clarity. So they've really been pushing on establishing GIFT as a premier destination. But I think the big one on residency-based tax that we were having a conversation on, but that also is not enough to bring foreign investors back. As we've been discussing all day, I think the risk-adjusted return needs to line up.
Are you seeing that in your client cohort, Rohinton? I'm sure you interact with a lot of FIIs. Is that the kind of...
Oh, yes. So FIIs, as you know, it's the predominant story is the exchange rate is falling.
Yes.
The Indian stock markets, up until recently, they felt were overvalued, and consequently a constant outflow to other emerging markets and other destinations where the yields are better. I think there will be a point of time where they will come back as the exchange rate potentially stabilizes, etc. But I think the confidence that needs to be there that, the rates remain the same. They were for a long time 10%. There was a root shock when it went up to 12.5%. So I think, again, tax policy does influence some of these things. and trying to have stability in rates and policies is important from a foreign investor perspective.
No, I was being more specific about the Tiger Global ruling and, indirect transfer and the like. So
I guess the Tiger Global ruling is also something which generated a lot of press, I would say. But again, as a tax consultant, when I look at that ruling, it basically reinforces what we as tax consultants have always said along, that if you're planning something, plan it based on commercial realities and don't be cute about the way you do your planning. And consequently, that's basically what the court said.
Yes.
So I don't think, I don't believe we should try and put too much on that Tiger Global ruling. It has created a little bit of buzz in the marketplace, but essentially it just reiterates what we've said all along.
Okay, let me also welcome on board Mr. R. Doraiswamy, CEO and MD at LIC. Mr. Doraiswamy, we are of course debating budget as soon as the speech ended, but curious to understand, how are you reading into the budget this time?
Good afternoon, and thank you for having me on the show. This budget, to me, is a visionary budget that defines the new India's and the government's commitment towards making India move forward into the top 3 economies of the world. We are seeing a rising India, which is scaling up in many ways, and the focus on the 3 kartavyas that the finance minister has talked about. The focus on 7 strategic industries, strengthening of MSMEs, as well as, more importantly, the focus on improving the income of Bharat, or the rural population of India, is something which is really making it look sound and a very visionary budget to me. Mr. Doraiswamy, the market is a little disappointed with the budget, especially after the STT increase which has come in. How do you see that? Is that a disappointment for you as well? No, actually, this was perhaps something which was not expected. So the initial reaction of the market is negative, no doubt. But I think when you go through the finer prints, and particularly the points that they've talked about, the development of infrastructure, the logistics, the investment promotion for data centers, technology, rare earths, etc., I think the market will slowly come back. That's what I expect. Which are the sectors do you think, which got a boost from this budget, Mr. Doraiswamy? Certainly, the strategic sector that they have talked about, particularly the investments in infrastructure, is going to be high, which is going to help the country develop. And the road corridor, the waterways that is being developed, the investments in particularly biopharma, particularly the education focus on upskilling the youth and making people ready for employment is something which is going to be the thing to look forward to, certainly.
Mr. Doraiswamy, the misses, of course, there have been hits, but a couple of misses with regard to the fiscal, or the fresh bond or the gross borrowing number. It's come in slightly elevated. Would that at all, you being the largest insurer in the country, would that at all bother you?
I look at it as an opportunity for insurers, because we are a big participant in the government securities market, and I look forward to the options being available to us for investments which are going to be in the interest of the insurance industry. Finally, if I were to ask you to rank this budget, how will you rank it in a scale of 1 to 10? No, I don't want to do that, but I will certainly say this is an expected lines, particularly on aiming towards a long-term growth of the country. I'm sure this is going to help the industries to grow up. A lot of focus is being given on the rural income growth, the special fund created for credit guarantee. All these things are going to help the country's development on a whole, and also focus on the technology sector, which is going to be the thing of the future. I'm sure I will rate this budget reasonably satisfying.
Right. Okay, Mr. Dharaiswamy, thank you so much for your time. Great to be speaking with you. Let me also welcome on board Umesh Chaudhary, Vice Chairman and Managing Director at Titagarh Rail Systems, joining in on the show right now. Umesh, hi, great to have you on the show. The budget is greenlit 7 new high-speed corridors, right? With Titagarh already holding that 7,000 crore rupee Vande Bharat order, tell me how quickly can you now sort of, pivot production lines to try and capture this massive new demand?
Yes, good afternoon. Thank you. I think it's a great, it's music to our ears. The Vande Bharat contract, incidentally, including the service portion, is about 24,000 crore. We are at about 50% or 51% of that because it's a consortium with BHEL. But, we have continuously been investing in creating our capabilities and capacities in the trains. Particularly, I've also said that we are looking at high-speed development in our own facilities. And we are fully prepared to respond to this call of the nation when this 7 new high-speed corridors is going to come up. Definitely, this cannot come up on the basis of imported rolling stock. So where the rolling stock is concerned, Titagarh is fully prepared and very excited to participate in this opportunity. Umesh, you were looking at fresh tenders coming in this year for the rolling stock, and if I look at the budget in estimates, 65,000 crores has been provided for in FY27. Do you see this as a good sign, because the growth is under 5% with respect to railway expenditure? So as far as I'd mentioned last time also on your show that, it's the quality of investment, not only the quantity of investment. And what we've seen on the two sides of our business, both on the freight side and on the passenger side. On the freight side, with the whole ambition of India and the whole realistic ambition and the roadmap of India to become the third largest economy in the world, we will have to optimize on our logistics cost as a percentage of GDP, for which the railway investments that have been made over the last decade or so, decade plus, have now are going to be utilized. And for that, there will be additional rolling stock requirement. On the passenger side, this is absolutely phenomenal what we heard about the 7 new high-speed corridors. But if you look at the overall capex has gone up. Even railways, we understand, is higher than even last year, which in itself, if you see, has been a huge growth over the last years. So even with the denominator being very high, there is an additional growth that has been forecasted in the infrastructure spend on the railways.
Umesh, how large is the opportunity for you and Titagarh in particular? The 7 new corridors that will likely get created. What kind of an opportunity does it set for you?
I think it's not quantifiable at this point of time, but all I can say is that once this comes up, our existing facility is not going to be enough to cater to this demand. So, that speaks volumes, because we are very excited. We're already kind of thinking in terms of what else we have to do in terms of investing further, in terms of growing our capabilities and capacities further, because this is really a transformational step. A country like India, which is so large, so diverse, needs very strong, very robust railway infrastructure. And with this kind of an announcement coming up, this is not an incremental growth. This is a quantum leap, which we are seeing in the railway infrastructure.
And Umesh, given this and given the opportunity size available, do you believe that India needs to invest far more than this 2.8 lakh crore? Is the opportunity size far larger? Can we continue to grow at maybe 10% next 10 years within this railway budget?
I believe so, because you see, with the kind of plans that the government is unfolding, you see, let's look at ourselves maybe 3 years or 4 years ago. We could have never thought about India having one high-speed rail corridor. When Mumbai-Ahmedabad was announced, there were many critiques to this project as well, that India does not need high speed. But just consider the amount of transformation, economic transformation that it will make to the country. And if you see anywhere in the world, wherever rail connectivity has been invested into, the overall economic growth has really followed in a very significant way.
So with the only thing limiting India today in terms of growth is the vision. And that vision is something that our Honorable Prime Minister is providing in abundance. So I see that 10% or even more growth is very much feasible.
Right, Umesh, great to have you on the show. Thanks for joining in with that quick take, and congratulations. You're one of the very few people who are actually smiling post the budget. Very quickly then, let's just check in on where the equity markets are settling in for the day. Some amount of recovery definitely in place, but you can't really say that we're out of the woods. We're still down about 286 points. You've got a Kalyan Jewellers, which has shot up about 4.5%. Amber, Delivery, Tata Elxsi, Titan, Wipro, Max Healthcare, TCS. Those are your gainers in trade, but a large fraction of the market continues to struggle, and that can be seen with the way the market breadth is panning out. Within the F&O pool itself, you've got a 170 count to the declines, with just about 41 names standing to the green as we speak right now. Radhika, all of this dust will settle down, but what should investors tomorrow morning be bracing themselves for?
Actually, not very much. I think the budget doesn't change status quo. Outside for a few capital markets and broking stocks which have to see the impact, I think investors should realize that they need to build multi-asset portfolios, and that includes equity, bonds and fixed income, because I think January has taught us that each asset class is extremely volatile.
No gold and silver?
No, multi-asset with gold and silver, but in the right quantum. So I think equity continues to be a growth asset class. I think that doesn't change. The GDP numbers remain intact. And I think as long as earnings growth continues to surprise us positively, equity markets will deliver. And I don't see anything in this budget that hurts earnings growth of most sectors. So I think investors should wake up after a Sunday and move forward with their portfolios.
Wake up after a Sunday, okay.
And you guys should get some rest.
Yes.
It's going to be a long day for us.
Next Sunday, absolutely. Rohinton, final thoughts with regard to taxation and the changes that have played out. Your take, of course, so kind of to sum this up to a certain extent, you said that there's a greater need for tax stability, tax policy stability, but anything else that's standing out for you in the fine print?
So I think there is this one trend which has started 2 years ago, which is where direct taxes have now significantly been the major contributor of all taxes. So if you see direct taxes growing at 8% faster than indirect taxes, and also the fact that the last year's tax cuts have not actually significantly dropped our individual tax collections. So that's a very good trend. So what I foresee is, again next year, we will see a pickup in individual tax as the GDP grows, as revenues grows. So I see that as a very positive sign. I also see a few procedural adjustments which have been made this year, which are positive for taxpayers overall. One of the things that I like to specifically call out is the reduction in the prepayment amount of tax that needs to be paid before appealing a tax order. So earlier, when you got a tax assessment, you had to actually pay 20% of whatever was demanded before you could even appeal the order. That's been reduced to 10%, and that's a positive sign given the fact that we have almost more than 5.5 lakh cases stuck at the Commissioner of Appeals. So unless the tax department really quickens some of this resolution, I think we see a little bit of tension going on still over there.
Okay, Rohinton, Radhika, thank you both of you. You've been great today. Thanks for taking time out on a Sunday and joining in. Thank you both so much. We'll take a very quick break, come right back. We'll continue tracking markets on the other side.
And nothing should stop our soldiers from marching forward. To make this possible, somewhere a strong bridge has been built. At Ultratech, India's #1 cement, we believe that to keep growing, India needs to keep building. Ultratech Cement. As India builds, India grows. Ever wondered why this long metro line was built? It's just so Papa can reach home early to have his kids jump into his arms with joy. At Ultratech, India's #1 cement, we believe as India builds, India grows. Somewhere, a new road has enabled science to reach a remote village, so that Purni can think of reaching the moon one day. At Ultratech, India's #1 cement, we believe as India builds, India grows.
The heart of Decode is driving because the on the ground.
Welcome back. The pain in markets accentuated now, a 1.25% cut on the Nifty 50 index. We're 320 odd points lower from where we started the day off. So clearly, pain is visible. Let me talk about a few stock sectors which are witnessing this pain. It's again the metals pack which is dominating. Hindalco, Coal India, BEL. In fact, the defense pack has also joined in. There's also the PSU banking pack which is in pain, and SBI and some of the other PSUs, including an ONGC, also seeing visible pain today. All of those with cuts of 3% plus. ITC, Nestle also Eicher Motors, Shriram Finance, Adani Ports, Jio Finance, ONGC, all of them seeing cuts of over 3% in trade. You look at the gainers, it's shallow and very, very few. In terms of even the Nifty 50 index, just 7 gainers, predominantly the IT pack. Outside of that, it's only the healthcare pack and maybe Sun Pharma, which is standing out on the back of numbers. But outside of that, it's a sea of red on the Nifty 50 index.
Nifty capital markets is down nearly 5.7%.
That's correct. So the capital market plays are where a bulk of the pain also resides. I'll just quickly look at sectors before I ask Kunal for a view. Kunal Bothra also joining us in studio. The Nifty IT index is up 1.2%, but you look at the PSU banking index is now down 4. The Nifty India Defence Index is down now nearly 4.5%. Mind you, at the top, we were up 2+% on the Nifty India Defence Index. So we're now down nearly 7% from the day's high on the Nifty India Defence Index. So that's the one which is seeing a ton of pain. The metals pack down 3.5%. Energy down, oil and gas down 2.5%. The Nifty Bank is down 1.5% as well. The Nifty PSU Bank, of course, I spoke about, down nearly 4%. Kunal, it's not looking pretty at all as the day has gone by. It's been choppy as well. So it's not just been a one-way downward slide. It's been a very choppy day of trade. What do you make of it?
Yeah, I think, of course, the first, first half, the markets were pretty much on the positive note. But I think the midway session post just the last end of the budget speech, I think that's where we got into that extreme bit of volatility. There was a point where the Nifty not just managed to break below that 500, 600 mark on the spot levels, but we briefly managed to even come back towards an aberration of sorts of 4 sigma balling a band, for the index. And that's why I think we've seen a recovery of sorts for the indices. Difficult to anticipate now that from a near-term play that whether we could see a durable bounce back, because what this closing could do for the Nifty, I mean, looking at the index so far, is that this could be a multi-week low for the index on closing basis. And that, I believe, could probably deter the short-term prospects for the index going forward. So which means that there has to be a very substantial recovery across many other sectors, because, right now we were at a point where the banks and the metal stocks were doing the heavy lifting. Devoid of the metal sectors performing and looking at the last couple of days of correction, and the bank index also trying to show some follow-through correction. Today, I believe that we could now probably need to see more sector trends. So as of now, expecting that the markets would just about hang on to that 25,000 mark, but maybe I think next week there could be some bit of more selling which would come back.
Okay, how do you play this?
See, I think there are few pockets of brightness which is still there. The IT pocket still looks very strong. You've seen few of the PSU names, PFC, REC, for example, they could find some favor. So I would probably look at few of those pockets over here. Tech Mahindra, for example, from the IT pack, looks extremely attractive. The stock now perched at almost 1730, 1740 levels on the spot. So I would look out for recommending a buy over here with a potential target around the 1800 kind of a zone, stop loss to be kept at 1710, and PFC could be an interesting bet at current levels of 380. Would look out for targets in the range of 400, stop loss to be kept at 375.
Okay. Kunal, what are you tempted to short though? Do you think the metals cool off will continue tomorrow as well?
Yeah, so metal cool off could continue. The PSU banking, I think, would be a disappointing trade on the short-term charts. You've seen some corrections happening over there. Maybe I think the defense stocks or the railway names, I think they could go into maybe one more leg of correction on the downside. So I think that's one pocket of weakness which the markets are hinting towards. Maybe I think that could be one zone where traders could look at a shorting opportunity. But, the recovery also on the intraday part for the index indicates that there has been a new range which has been established. We've been making this point over the last few weeks that the markets are going into a shift of range every 500 points on the downside. So now we are probably trying to redefine a range which could be 24,500 as a support and 25,000 broadly as a resistance.
Okay, just looking at the individual stocks, Amber, Delivery, Tata Elxsi, Titan, they're the only ones perhaps which are holding out, and select pharma as well, or rather healthcare, I should say, Kunal, Max, etc. Meaningful move, you think, or not quite?
See, not quite, because, when you look at the last 2-3 months of charts, they were beaten down significantly. So it calls in for some sort of a respite over here. But for a trend to begin, you don't need that one strong day of price up move. You need a follow-through up move. That's missing for many of these names. So we need to see if the next week, starting from Monday tomorrow itself, whether these stocks see a follow-through up move. But as of now, it could be just about a signal which could be positive.
Okay, Prime Minister Modi is giving his statement after the union budget. Let's cut across.
महिला वित्त मंत्री के रूप में निर्मला जी ने लगातार 9वीं बार देश का बजट प्रस्तुत करके नया रिकॉर्ड बनाया है। ये बजट अपार अवसरों का राजमार्ग है। ये बजट वर्तमान के सपनों को साकार करता है और भारत के उज्जवल भविष्य की नींव को सशक्त करता है। ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है। साथियों, आज भारत जिस रिफॉर्म एक्सप्रेस पर सवार है, इस बजट से उसे नई ऊर्जा, नई गति मिलेगी। जो पाथ ब्रेकिंग रिफॉर्म्स किए गए हैं, वो एस्पिरेशन से भरे हुए भारत के साहसिक, टैलेंटेड युवाओं को उड़ने के लिए खुला आसमान देते हैं। ये बजट ट्रस्ट बेस्ड गवर्नेंस और ह्यूमन सेंट्रिक अर्थरचना के विजन को साकार करता है। एक ऐसा यूनिक बजट है जिसमें फिस्कल डेफिसिट कम करने, इन्फ्लेशन कंट्रोल करने पर फोकस है और इसके साथ ही बजट में हाई कैपेक्स और हाई ग्रोथ का भी समन्वय है। साथियों, ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं। ये करोड़ों देशवासियों का संकल्प है। दुनिया के एक ट्रस्टेड डेमोक्रेटिक पार्टनर और ट्रस्टेड क्वालिटी सप्लायर के रूप में भारत की भूमिका लगातार बढ़ रही है। हाल में जो बड़ी बड़ी ट्रेड डील्स भारत ने की है, मदर ऑफ ऑल डील्स, उसका मैक्सिमम बेनिफिट भारत के युवाओं को मिले, भारत के लघु और मध्यम उद्योग वालों को मिले। इस दिशा में बजट में बड़े बड़े कदम उठाए गए हैं। साथियों, इस बजट में मेक इन इंडिया और आत्मनिर्भर भारत अभियान को नई रफ्तार के लिए महत्वाकांक्षी रोड मैप प्रस्तुत किया गया है। इस बजट में नई उभरती इंडस्ट्रीज यानी सनराइज सेक्टर्स को जिस मजबूती के साथ समर्थन दिया गया है, वह अभूतपूर्व है। बायोफार्मा शक्ति मिशन, सेमीकंडक्टर मिशन 2.0, इलेक्ट्रॉनिक कंपोनेंट मैन्युफैक्चरिंग स्कीम, रेयर अर्थ कॉरिडोर का निर्माण, क्रिटिकल मिनरल्स पर बल, टेक्सटाइल सेक्टर में नई स्कीम, हाईटेक टूल मैन्युफैक्चरिंग को बढ़ावा, चैंपियन एमएसएमईज तैयार करना, ये फ्यूचरिस्टिक है, देश की वर्तमान और भविष्य की आवश्यकताओं का ध्यान रखती है। एमएसएमईज को, हमारे लघु और कुटीर उद्योगों को जो समर्थन इस बजट में मिला है, वह उन्हें लोकल से ग्लोबल बनने की नई ताकत देगा। साथियों, बजट में इंफ्रास्ट्रक्चर को मजबूत करने के लिए कई बड़े कदम उठाए गए हैं। डेडिकेटेड फ्रेट कॉरिडोर, देश भर में वाटरवेज का विस्तार, हाई स्पीड रेल कॉरिडोर, टियर 2 और टियर 3 शहरों के विकास पर विशेष ध्यान और शहरों को मजबूत आर्थिक आधार देने के लिए म्युनिसिपल बॉन्ड्स को बढ़ावा। ये सारे कदम विकसित भारत की यात्रा की गति को और तेज करेंगे। साथियों, किसी भी देश की सबसे बड़ी पूंजी उसके नागरिक होते हैं। बीते वर्षों में हमारी सरकार ने देश के नागरिकों के सामर्थ्य को बढ़ाने पर अभूतपूर्व निवेश किया है। हमारा प्रयास स्किल, स्केल और सस्टेनेबिलिटी को निरंतर बल देने का रहा है। जैसा कि आज पार्लियामेंट में निर्मला जी ने कहा है, यह युवा शक्ति बजट है। उसमें युवा की सोच भी है, युवा के सपने भी हैं, युवा का संकल्प भी है और साथ साथ युवा की गति भी है। बजट में जो प्रावधान किए गए हैं, उससे अलग अलग सेक्टर्स में लीडर्स, इनोवेटर्स और क्रिएटर्स तैयार होंगे। मेडिकल हब्स के निर्माण से, एलाइड हेल्थ प्रोफेशनल्स के माध्यम से, ऑरेंज इकोनॉमी यानी ऑडियो विजुअल गेमिंग को बढ़ावा देकर, पर्यटन को प्रोत्साहन देकर और खेलो इंडिया मिशन के माध्यम से युवाओं के लिए नए अवसरों के द्वार खुलेंगे। भारत को दुनिया का डेटा सेंटर हब बनाने के लिए टैक्स में बड़ी छूट की घोषणा भी की गई है। मैं भारत के युवाओं को विशेष तौर पर इस बजट की बहुत बहुत बधाई देता हूं, क्योंकि इससे एम्प्लॉयमेंट जनरेशन को बड़ा बूस्ट मिलेगा। मुझे बहुत खुशी है कि इस बजट में टूरिज्म और विशेषकर नॉर्थ ईस्ट में टूरिज्म को बढ़ावा देने के लिए भी ठोस कदम उठाए गए हैं। भारत के अलग अलग राज्यों को ताकतवर बनाकर संतुलित विकास की नींव भी इस बजट में मजबूत की गई है। साथियों, हमारे देश में 10 करोड़ से ज्यादा महिलाएं सेल्फ हेल्प ग्रुप से जुड़ी हैं और बड़ा सफल अभियान रहा है। महिलाओं द्वारा निर्मित, महिलाओं द्वारा संचालित सेल्फ हेल्प ग्रुप्स का आधुनिक इकोसिस्टम बने, बजट में इसे प्राथमिकता दी गई है। कोशिश यही है कि हर घर लक्ष्मी जी पधारे। हर जिले में छात्राओं के लिए नए हॉस्टल बनाने का अभियान भी शिक्षा को सुलभ बनाएगा। साथियों, भारत की कृषि, डेयरी सेक्टर, फिशरीज, इन्हें हमारी सरकार ने हमेशा सर्वोच्च प्राथमिकता दी है। इस बजट में भी नारियल, काजू, कोको और चंदन की पैदावार से जुड़े किसानों के लिए अनेक अहम कदम उठाए गए हैं। भारत विस्तार एआई इस टूल से किसानों को उनकी भाषा में जानकारी मिलने से उन्हें बहुत मदद मिलेगी। फिशरीज और पशुपालन में उद्यमिता, उसको बढ़ावा देने से गांव में ही रोजगार और स्वरोजगार के और ज्यादा अवसर बनेंगे। साथियों, ये बजट एम्बिशियस भी है और ये बजट देश की एस्पिरेशन को भी एड्रेस करता है। मैं एक बार फिर निर्मला जी और उनकी पूरी टीम को इस फ्यूचरिस्टिक बजट के लिए, संवेदनशील बजट के लिए, गांव, गरीब, किसान का कल्याण करने वाले बजट के लिए बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
And nothing should stop our soldiers from marching forward. To make this possible, somewhere a strong bridge has been built. At Ultratech, India's #1 cement, we believe that to keep growing, India needs to keep building. Ultratech Cement. As India builds, India grows. Ever wondered why this long metro line was built? It's just so Papa can reach home early to have his kids jump into his arms with joy. At Ultratech, India's #1 cement, we believe as India builds, India grows. Somewhere, a new road has enabled science to reach a remote village, so that Purni can think of reaching the moon one day. At Ultratech, India's #1 cement, we believe as India builds, India grows.
the heart of Decode is driving cover. Because in power on the ground.
Welcome back to this budget special, and in conversation with us is Saurabh Mukherjee, Marcellus Investment Managers. Saurabh, how are you looking at the budget? Positives, negatives?
Well, look, from my perspective as a fundamentally oriented investor, two big positives and one negative. I think the biggest positive for me was the FM's attack on FNO, because for a year I've been shouting out from hoarse that we shouldn't have this volume of FNO activity in our country. We're simply transferring retail investors' money through the auspices of the stock market to smart traders on Wall Street who are using state-of-the-art algos. As SEBI has repeatedly flagged that 92% of FNO traders lose money. That was money that would have been going into the consumption economy. So rather than banning FNO or doing anything drastic like that, FM's done something very smart. She's saying, you're doing something which is damaging for the country. I'm going to tax you for that. And through those tax revenues, hopefully, the fiscal stress eases. So kudos to the FM. I think the right move to try to reduce the amount of FNO volume, dampen enthusiasm for FNO trading. I think the second intriguing positive, and I hadn't expected this, was the announcement of a high-level committee to review the banking sector. I think very intriguing. Remember, this is the biggest part of the stock market, strategic heart of the economy. All sorts of intriguing possibilities open up, privatization, more foreign money in the stock market, perhaps corporate money in the stock market. I'm seeing this as a positive for private sector lenders in our country. The negative for me was this whole obsession with jacking up capex, which obviously translates into higher borrowing requirement in the market. So as opposed to borrowing roughly 15 trillion in F26, the government says it will borrow 17 trillion in F27. I don't think the bond market's going to like that. And I think that'll push up bond yields, push up the cost of capital. The very thing that the chief economic advisor is saying in the economic survey is not required, right? We don't need higher cost of capital. I think this whole obsession with capex, unfortunately, is pushing us in that direction.
On the basis, the two positives and the one negative that you just highlighted, would you be compelled to buy or sell anything in the current market?
I don't think the budget itself is the main driver. I think the main issue is the earnings slowdown. It's been carrying on for 2 years. I couldn't see anything in the budget, Aisha, which brings us out of the earnings slowdown. Right? I couldn't see a trigger that brings us out of the earnings slowdown. As I said, marginal positive as you shift money from the FNO ecosystem into the real economy, but not enough to, I think, swing the direction of earnings from negative to positive.
From a capex point of view, 12.2 lakh crores of capex, around 12% jump, which is slightly ahead of what Street was expecting. Defense, again, nearly 17-18% jump in capital outlay. To 2.19 lakh crores, and then you have the other incentives. Railway has, capex or expenditure has been increased by 10. So, from a capex and infra point of view, this budget has delivered those numbers, right?
The reason I don't like this, right? The reason I don't like this is I don't see the economic flow through. Right? If you look at the data on completed projects in the last 5 years, completed projects are barely growing at 2%. Fiscal outlay is growing at 10, 15, some years 20% on capex, but completed projects are growing at 2%. Somehow, somewhere out there, all this capex is getting jammed into some cement pit, and the benefits of the economy are not flowing through. So you're jacking up the cost of money for the country in the bond market because extra borrowing, extra capex is funded by extra borrowing. But the economic flow-through impacts are not evident to me. And I would like to submit to you that the weak earnings growth now we are seeing for the third year running is proof that the economic flow-through of higher government capex is not happening.
Some could argue that the capex which has been put in is a long period capex and it will be back-ended.
3 years ago, the earnings slowdown started. So, our careers in the stock market are 10, 20 years. I'm happy to wait for another 10 years to see the benefits of capex. But it's not evident to me that the higher defense capex, for example, is going to translate into jobs on the ground or higher GDP growth or higher earnings growth over the next couple of years. Similarly, we've had, as you're rightly saying, an extensive road building program now for 10 years, right? I'm not seeing the economic impacts of that flow through. I appreciate that the economic CEA in the economic survey has jacked up India's GDP growth prospects. I hope that we see that translating into earnings growth. Earnings growth is what we in the stock market live or die by, and I'm not seeing the benefits of capex turning into earnings growth.
So what needs to change? Sorry, what needs to change there?
I think my reading of the situation, right? It's a complex situation. Why isn't capex turning into jobs? My reading is the Indian state can roughly do 10 trillion rupees of capex. Sure. Once you go north of that, the execution capacity simply isn't there, right? And the money ends up getting spent in areas which don't translate into economic throughput. I think that's why I was keen going into the budget. If we could see either a capping of capex or, if anything, a diminution of capex and tax cuts on personal income tax and corporate tax. But hey, that was a fantasy budget on my part. So capping of capex would have been good, but that would have meant that on Monday, we wouldn't have had to disappoint the bond market. My reading is when the bond market opens tomorrow, we will see bond yields going further up.
But there's a debt framework which has come into place, right? Debt to GDP. She's sticking to that. Yeah. And by 2031 at 50%.
So my reading of that debt to GDP framework is more government borrowing. I think the government's basically created room over the next 5 years to borrow 10 to 15 trillion rupees extra. Again, if I was a bond investor in India, that's not great news, right? The currency is under pressure and the government is creating room to borrow more money than was the case with the preceding framework, which would have taken us to a budget deficit of 3% by, I think, F31, right? So the new debt framework basically creates room to borrow more money over the next 5 years, which means even more borrowing coming into the bond market.
So fiscal deficit would be around 4% by 2031 in that sense. So the room is only for 20 to 30 basis points.
So 10 to 15 trillion, it's in rupees trillion. Think of it in rupees trillion, right?
Yeah.
The extra borrowing in the bond market is crowding out what could have been going to, say, a banking system or to blue chip corporates, right? This is a serious issue. The cost of borrowing is rising in the bond market, and that's increasing the cost of capital for India.
But Saurabh, tell me, is there A, valuation comfort right now, and B, an investor, how do they make peace with the $22 billion of outflows that we've seen from FIIs?
So valuation comfort in, I think, small and mid caps is hard to find. Similarly in PSU, I would still say it's small and mid caps hard to find, given the earnings prospects, right? Valuation comfort in the context of earnings prospects, right? I think that ironically, the areas of valuation comfort are the areas that very few people in India like, which is straightforward, high-quality private sector blue chips, which ironically are trading at sensible valuations, but nobody wants to touch them with a barge pole. So, my age-old favorite in this example of this is HDFC Bank. They're growing earnings in double digits, significantly faster than the bench. They're growing earnings at double digits, significantly faster than the bench, in spite of the higher cost of borrowing in the bond market, by the way. And most people in India don't want to buy high quality private sector large cap plays. They're either looking for small and mid cap bargains or looking for PSUs. Neither of those ideas appeal to me as being sensible ways to invest in what is a tough economic landscape, right? To give the FM that, it's a tough economic landscape, tough to navigate. In that context, the fact that she's hitting her budget deficit targets and reiterating fiscal stability as one of the anchors of this government's budget program, I think that's a good thing, right? Focus at least on fiscal stability. The last thing we need in an unstable world is for the government of India to lose fiscal discipline.
Okay. Kunal, you also thought that HDFC Bank is a good buy, right? Right now on the charts, I think, 1,000 odd levels right now?
Yeah, it's been a good time that the PSU banks have enjoyed. And I think private sector banks have underperformed for a significant portion of time. And there has to be a point where the money would probably come back again. We saw traces of that, I think, on Thursday and Friday, where PSU banks, for the first time, I think, start to see some selling pressure. Private sector banking stocks became a lot more resilient. Maybe I think that could be a sign that there could be sector rotation, which could start to happen in the private sector banking names. We saw leadership for the first time in Axis Bank. That stock, I think, post results also, I think, has come back towards a fresh high for itself. So those signs are there. Even today, for example, HDFC Bank is still holding fort. banking index has managed to make a new low swing buys. HDFC Bank, I think relatively has been strong. It's still not broken that swing low. So that tells you that there's resilience which is building up.
Let me now welcome on board Ashish Kumar Chauhan, MD and CEO at NSE, and find out what he's made of the budget. Mr. Chauhan, great to have you today on ET Now. Always a pleasure hosting you. What have you made of the budget? Let me start with that first.
Broadly, I think if you look back almost last 25, 27 years, whenever BJP governments have been in power, they've been very fiscally conservative. And if you see Modi ji's last 11 years and Nirmala Sitharaman's last 9 consecutive budgets, you see there is a streak of fiscal consolidation. They are going from literally 4.4% to 4.3% next year, and debt to GDP ratio will become 50% in next 3-4 years, which is going to be perhaps the lowest in the large economies in the world. Today, America is going towards 120%. Japan is already above 200%. China is also very high if you take all what is hidden in terms of their fiscal debt. So overall, for me, this is a solid way to ensure that our ship continues to sail in safe waters. And at the same time, they also allocated almost 11% more money for the infrastructure to 12 lakh crore, which 12.2 lakh crore. So that's again a very large increase. So broadly speaking, they are creating a more productive framework for all nooks and corners of India, where all the FTAs that have been signed are going to ensure that more and more jobs get created in the interiors, and that's where the virtuous cycle kicks in. And you've seen that India has become the fastest growing large economy in the world with 7.5% in growth rate. It's no mean feat, and that's basically done despite being not very populist. They've always been fiscally responsible, and I see that streak even now in the proposed budget.
Absolutely. I have to talk to you about the fact that FM has now more than doubled STT on futures to 0.05% and hiked options also to 0.15%. With the market reaction today, Mr. Chauhan, is this, you really think, a necessary speed breaker for retail speculation? Or would you say that this is going to permanently damage derivative volumes?
Broadly speaking, as you rightly said, there has been a perception created by various sections that there has been over speculation, and then the government has to do its part. And that's where, literally in last 11 years, they've increased the options-related STT many times. And today also they've increased a little. But futures probably is happening first time because futures was not considered that rampant. And by increasing it, they are trying to also in some ways compensate for the lower STT that they've seen in the 25, 26 actual results, because they were expecting, I think, 70,000 crore. It has become much lower. And in some ways, it seems to have two-pronged framework. One is the reaction to satisfy people who want to reduce the over speculation and also in a way go towards other creating other sources of revenue. Because India is growing, the people who are participating in markets are growing. I don't see, other than next 2-3 months, any impact on either futures volumes or options volume going forward. But naturally, there will be some short-term reaction to the higher cost that is going on, because many people's, especially high-frequency traders' algorithms are already made on this kind of numbers. They will have to recalibrate their models to ensure that they don't go into losses with higher per transaction cost coming in the form of higher STT.
Did it lead to any recalibration from your end as well, Mr. Chauhan? You finally secured the SEBI NOC for a listing. Will today's tax changes, which have seen that kind of reaction that they have with brokerage and exchange stocks forced you to perhaps recalibrate your valuation or timing of the IPO roadmap?
Broadly speaking, ours is a more than a listed company today. We have 191,000 shareholders already. We give all the sort of details, all the quarterly results and any material event that happens as if we were a listed company. And that's a regulation also. So broadly, it's basically a way to just formally recognize that listing framework and give more liquidity to existing shareholders as well as new shareholders who want to come in. It's more a procedural activity and nothing to do with pricing or other things. Whatever the price available at any point in time, when we come with our IPO, it will take probably 7-8 months from now. So whatever the pricing that the merchant banker suggests, our board should be able to accept, and it will be like a 4.5% of the total equity, which will be taken from the existing shareholders and given to new shareholders. So at NSE, we are not raising any new funds. It will be a pure play OFS. And whatever the pricing, which is based on the market conditions and, of course, our future profitability, that will have to be considered before actually finalizing the pricing.
Ashish, good afternoon. Sajid here. Do you think that the finance minister is also pushing the investor to invest more into the cash market rather than speculate in the F&O market? And from an FI point of view, do you think this STT will dissuade them into more algo trades which are going into F&O?
Broadly speaking, Sajid, been good to see you. In some ways, the FIIs don't trade every second. They are not the high-frequency players. There are specialized high-frequency players, but what we know as FPIs are usually not the ones who once they buy, they stay in for stock for at least a year or 5 years. And that's why they don't see this STT on options or futures as something very important. What they look for is actually the companies and economy's ability to sustain the growth and also increase their profits. And that's why I don't see the foreign portfolio investors getting rattled because of some minor STT changes in the derivative side. Naturally, the HFT players, which are largely Indian setup, although they might be foreign owned, they will have to recalibrate their the algorithms to look into whether they will be making profits at the new levels on the old algorithms, or they'll have to develop newer algorithms, test them and all. So it may take 2-3 months to kind of update those algorithms. And again, more and more people are coming into the markets, in Indian markets specifically. Now we have NSE alone supports close to 12.5 crore direct accounts, unique direct accounts using PAN. And so we have very large number of people even now coming in every month, and of course through mutual funds or otherwise. So overall, I don't see any kind of going down in liquidity or in derivatives or otherwise.
Okay, thank you so much, Mr. Chauhan, for coming in and speaking with us. Great perspective as always with regard to the plenty of moving parts, in fact, in this budget in particular with regard to capital market plays. Thank you. Let's bring on board Sunita Reddy, Managing Director, Apollo Hospitals, joining us this afternoon to give us a sense of how she's viewing the budget. Ms. Reddy, great having you. Now, there was an ask with regard to the kind of incentives that hospitals required. Budget, does it do enough in your opinion? Ma'am, I believe you're on mute.
Oh, I think the budget looks at the broader ecosystem of healthcare. And I say this because, she started with the recognition of NCDs, a network of clinical trials, which will definitely encourage biosimilars production in India, which will actually bring drug discovery to India. As part of the ecosystem, she enhanced allocation to health to 1.1 lakh crores and went to skilling, where 1 lakh people will be skilled allied health professionals. She also addressed issues of geriatric care, mental health, and setting up emergency centers. So, beyond that, I think it's important to recognize that they're not just, while they're looking inward at India and strengthening Indian healthcare infrastructure by envisioning 5 medical value hubs, they are also looking at export of healthcare services, which is very encouraging. I think beyond what was said in the budget, we really need to look at the fine print, and we as healthcare providers will definitely use this to make sure that that we bring value into the healthcare system and continue to attract FDI into this very attractive sector.
Right, Ms. Reddy, stay with us. Lots more to talk about with you. But let me also welcome on board Anil Parab, the co-chair, FICCI Capital Goods Committee and whole-time director and member at L&T board as well, joining in on the show right now. Mr. Parab, great to have you today on ET Now. With this 12.2 lakh crore rupee infrastructure push that we've heard in the budget, tell me, does L&T have the kind of capacity to meet this kind of massive demand as a threat?
Yeah, I think if you see, this is only 9% increase over last year capex. So I would say that capacity is not a constraint.
Disappointed, sir, with regard to the growth number, just 9%, you call it?
Yeah, see this 9% growth, what you're looking for. I think your question was whether L&T has a capacity. I said that that's not a constraint. L&T is also doing a lot of infrastructure project outside the country. So I would say that the capacity buildup is not a constraint.
And the 9% itself, in terms of the number, do you believe that that falls shy of what you would have hoped for?
I would say that gives the continuity of growth, and I think what we should also keep in mind, the private capex also is improving in last 2-3 years. So considering that there is a momentum in private capex, this 9% I think is good for the growth of the economy.
Manufacturing R&D as well. Given that you at L&T have pretty much championed defense R&D, does the new 1 lakh crore rupee RDI fund finally give heavy engineering the kind of fuel that it needs to build a world-first technology in India?
See, up till now, I would say that operationalizing of this fund details are still awaited. As of now, okay, it is more of individual companies are doing their own product development. I think we'll have to wait and see the details. If I would say that if it is good for partnerships with the academia or some of the defense organization, it will be useful.
Here, the government is also looking at public-private partnership in the healthcare sector. Do you think that brings in a lot of opportunity for the private sector healthcare companies?
I think definitely it brings an opportunity, but more than anything else, by enabling skilling, they are enabling us to build the fundamentals for a very strong healthcare system for the future, which means that, less Indians would really go abroad for treatment, will be able to attract foreign patients to India for treatment. I think these are important while providing basic healthcare for all of India.
Also, Ms. Reddy, if I could ask you, you yourself are betting very big on AI, on genomics, right, at Apollo. Does the budget today provide that sort of real tax breaks, if you will, at all for digital health shift? Or would you say that this is still pretty much a luxury? And also the fact that FM talked about a wider insurance coverage as well. How does that change things for you?
So in terms of digital and AI, I have to say that it is a cost, but it is a cost that you need to incur now to be relevant in the future. And we will continue on this journey. Yes, our spending in AI and digital is quite heavy, but it enables us to reach people in Tier 2 and Tier 3 cities, and I think that matters. In terms of, are we moving in public and private sector partnership? I think we're very much there in that space that we're able to do that. But beyond that, there is. I must say that the budget enables investment into healthcare, and that's really what is crucial at this time, and enables us to build our own intellectual property.
Okay, Ms. Reddy, we'll let you go on that note. Thank you so much for joining us this afternoon and giving us that perspective with regard to the budget. Mr. Parab, let me come straight back to you. With regard to defense, because that's the other key pillar of L&T and its future strategy. Talk to us about how much of this spend is actually coming through, because you've got a very, very large spend. This time around, there's a 19% growth, I'm told, with regard to capex within defense. You believe that that sizable quantum comes through quickly, or you believe that that will likely be staggered?
See, actually, if you see, defense business has been a sort of, it comes in lots. It's not that it's a continuity. I would say that it will come in what you said in the slabs. It will not come in one go, because they have to also make provision for the programs which are already on.
And at L&T, if I can ask you, what's the capacity utilization like with regard to defense assets?
Actually, many of the facilities have a lot of spare capacity as on today because of this lumpy nature of the business. And this is the reality when it comes to the strategic sectors, not only defense, even the nuclear, because the continuity is always a challenge.
Yeah, coming to nuclear, what's the kind of traction like with regard to the new policy that they've come out with?
I would say that there is a good traction, and in fact, I think the two core issues which are addressed, one is the supplier liability, and the second is entry of private players. I do expect maybe 1 to 2 years from now, there will be a good traction in this sector. And I would say that I would have expected some more sort of reforms in this budget, especially the new technology of small modular reactor. Any new technology in the initial period needs some support. So I would have expected they bring down the GST on par with renewables, because there is a differential of almost 9%. Give it a status of green energy, and obviously, at least for some years, viability gap funding. But I did not see that.
Mr. Parab, such a pleasure having you on the show today. Thank you for your time.
My pleasure.
Well, we're just stepping into the last lap of today's trading session. 300 points of a knock coming in for the Nifty futures, and the breath as well is quite dismal. We'll address all of that with Kunal Bothra as well as Saurabh Mukherjee after this very short break.
And nothing should stop our soldiers from marching forward. To make this possible, somewhere a strong bridge has been built. At Ultratech, India's #1 cement, we believe that to keep growing, India needs to keep building. Ultratech Cement. As India builds, India grows. Ever wondered why this long metro line was built? It's just so Papa can reach home early to have his kids jump into his arms with joy. At Ultratech, India's #1 cement, we believe as India builds, India grows. Somewhere, a new road has enabled science to reach a remote village, so that Purni can think of reaching the moon one day. At Ultratech, India's #1 cement, we believe as India builds, India grows.
The heart of Decode, I think. Come. To be
Back with the budget headquarters right here in ED now. The markets, the Nifty alone down 300 points right now. And it's been quite a turnaround of sorts from where we started off. I mean, look at the sectors, PSU banks, for instance. Look at what's happening across the defense names. Look at some of the auto plays as well. I mean, to think of it, both Tata Motors, passenger vehicles, as well as M&M reacted very smartly to their monthly numbers. But it's been a sudden turnaround that we've seen ever since the budget speech got over, or mid-session, I would say. Metals, of course, has been a weakling from the word go. The only one decisive sector which is holding out has been IT, post-budget that is, and some of the select healthcare stocks, along with some of the EMS plays from within the broader end of the market. But we still got Kunal Bothra as well as Saurabh Mukherjee here with us. Saurabh, tomorrow morning, what should the ARM investor be doing?
I think, first of all, watch the bond market. If bond yields are going to go through 7% for even high-quality banks, which I suspect they will, I think bond yields will rise sharply. I think reduce your positions in financial services, because the cost of money going up for banks and NBFCs isn't good news, especially if you have NBFCs and especially if you have PSU names. Be careful about the the margin compression, which I think is coming. I'll still stay with the stalwarts. I'll stay with the stalwarts because as the cost of money rises, the strongest players will benefit the most. So I think that's the first thing to look out for. The second thing to look out for is the foreigner in the bond market, and thus the rupee. I suspect the rupee will go through 92 tomorrow, and I think that'll be something. Now, we've invested in IT services for many years to benefit from the declining of the rupee. The market is signaling the same as well.
Okay, let's cut across to the Finance Minister's press conference.
Draw your attention to. But subsequently, of course, we'll answer all your questions. All the secretaries are here with me. So this budget being the first one, as the Honorable Prime Minister said 2 days ago, this being the first one for the second quarter of this century, also leading towards Viksit Bharat 2047. We are laying the path and giving a push to the economy to maintain the growth momentum. And for that growth momentum or sustained economic growth, which we want to ensure, primarily we are looking at building the ecosystem with structural reforms which will go on. Reforms have been carried out. We are continuing to do the reform activities, so it will continue with an aim to make sure that we create enough environment for improving productivity and making sure employment is generated. Also, technology, 21st century, this century is completely driven by technology. So we will ensure that technology is brought in to benefit the common man, to make sure common man benefits in the sense of ease of doing living, or for his business to prosper, or for farmers for greater productivity, or better logistics, whatever. So technology for benefiting every common man. And above all, with all this, inclusive development. Sabka Saath, Sabka Vikas, and that is why you heard me bringing in schemes which have good allocations for bringing better health facilities, creating a cadre of people, not cadre in that sense, but a bulk of people who can come in as health workers, paramedics, and so on. And also making sure we are able to provide dignified opportunities for Divyangjan. Mental health has also received a lot of attention. So these are the side for Viksit Bharat and making sure Sabka Vikas hoega. But the idea is the advantage and the momentum that we gained since after COVID by increasing public capital expenditure will continue. We've announced that 12.2 lakh crores are coming through public expenditure this time. It is 4.4% of the GDP. I'd like you all to please notice that, which is the highest, at least in the last 10 years. It could even be highest if you were to take data earlier. No increment in capital expenditure, sustained fashion, has happened ever before. This one marking 4.4% of the GDP. Then what are the kind of things which will happen through it? You will have dedicated freight corridors. I've named Dankuni in the east, Surat in the west. Then I've also highlighted that 20 new national waterways, not national highways, national waterways are being planned. And again there, those are going to pass through some of the critical mineral areas. Orissa, where the mineral-rich state, you have the waterways taking it to the port. And the two ports have been identified, Paradip and Dhamra. Similarly, we are also making sure that the coastal cargo movements will be enabled through a cargo route, so that through the coastal area we are able to cut down on cost of movement of goods. City economic regions, developing them is a very big new measure that we're coming up with. And for that, an allocation of 5,000 crore per city economic region. Imagine the amount, 5,000 crores in 5 years. 1,000 crore per year per city is being given, and the emphasis is going to be largely on tier 2, tier 3 cities. And then talking of infrastructure further, with the capital expenditure coming with the big number, you're having also the high-speed rail corridors. 7 of them announced. The destinations are clear, so that they become the bridge for all these economical robust centers. So those are for making sure that the infrastructure and the capital expenditure are getting tied up, and the country benefits from the ripple effects that these can bring in. The 7 strategic and frontier sectors in which we've highlighted that will increase productivity and also have new investments come in and give emphasis for India's own brand on those things is on the biopharma sector. I think that's going to be a big change in the way in which we are looking at giving capacity for those who are able to research, who are able to undertake research and development. So 10,000 crore initiative again over five years for domestic biologics and biosimilar production. This is a clear message and backed with enough substance that India's lead in the pharmaceutical sector should be kept intact, but at the same time bring in newer ways of helping the pharma sector, and also because it has an impact on human health. Semiconductor mission had 2 major announcements that will improve the India stack and also the IP related matters. Electronic components manufacturing scheme for 40,000 crores.